Okay, I call this meeting of the City of Urbana Council Committee of the Whole to order. Would the clerk please call the roll?
Mr. Ammons.
Here.
Mr. Brown.
Here.
Mr. Jacobson.
Here.
Mr. Madigan.
Here.
Ms. Marlin.
Here.
Mr. Roberts.
Here.
Mr. Smythe.
Here.
Mayor Pressing.
Okay, we have two items already scheduled in additions to the agenda and staff report. The first is a presentation, Jewelry Making for Self-Empowerment by 2015 Arts Grant recipient, Dr. Amira Davis.
Hi, I'm Pauline, Public Arts Coordinator, and I have with me Dr. Amira Davis. But before we get to her presentation, I'd like to just give a quick summary on what the Urbana Arts Grants are about. The arts grants are open to individual artists, artist teams, organizations, and festival presenters, as long as their projects happen in Urbana with at least one free event or showing. And each project can receive between 500, that's the minimum, or 10,000, that's the maximum, although I don't believe we ever gave 10,000 or close to that. This cycle is the 7th cycle of the Urbana Arts Grant Program, and we received 44 applications requesting more than 183,000. This is a major growth. This is about 50% more than last year's, which only requested about 120,000. And with the amount available, we are only able to fund 25 projects. So our two groups of juries, they chose these 25 projects. And almost half of these projects only receive $1,000 or less. And this is just a sign that the Urbana Arts Grants are growing and it's just getting more competitive. And it's difficult for the juries to choose, but also I feel that we're getting better and better applicants, and we keep funding better projects. So with that, I'll hand it over to Dr. Davis, who is one of our recipients for this cycle. And I think her story really reflects what the Urbana Arts Grants is all about. And she presented at the last Public Arts Commission meeting, which Eric attended, and we talked about it, and we thought it would be good for her to share her story with us.
Good evening, and I'd like to once again thank the Urbana Public Arts Commission for giving me the funding to do this project. I had thought about doing something like this after I had gotten some money from them last year to do a community event for a Saturday school project that I had done. There was arts and literacy for children there. We had mothers that met, but with the mothers, I wanted to do something more. I wanted to eventually expand the Saturday literacy and arts program to include arts programming for women. I was working with a researcher from the U of I in Chicago. She was looking at the lives, the lived experiences of women living in the Inglewood area who were subjected to violence on a daily basis. Her research in sociogenomics was it's based on the premise that women, mothers living in that area, their gene expression was being altered from constantly being exposed to violence. So I wanted to come up with an arts-based intervention for women in those kinds of communities, any women suffering from trauma or just dealing with those kinds of experiences. And I initially thought about a lot of different things. I've been a crafter for 30 years, and I've been a musician for equally as long, as well as a mother for much longer. So I know that all of these things matter. When I lived in Chicago on the South Side, it was crafting and the arts that helped me with my own children. So the first things I thought about wouldn't work with these women. And I had made earrings for myself, but nothing more than that. So during the summer, I just woodshedded, and I came up with this idea, and everybody likes adornment. And so I thought that maybe a group of women would like to make jewelry. And so this was the growth of that particular idea, I had looked for somebody to give me a group of women to try this out on, and I went to Eastside Griffith at the Courage Connections, and she allowed me to partner with her to do this grant project. So, of course, funding for the arts helps artists help others. And, you know, as Artist Ed has received grants from the Illinois Arts Council and now a couple of times from the Urbana Public Arts Commission. I mean, this is the way that I'm able to kind of sustain myself. And my art is typically based on some type of education or therapy. I did arts and education programs for 20 years, first in the Chicago area and locally. So I depend on that kind of support. This is actually me and my daughters and granddaughter doing the Friday Night Live series, and we also do the Boneyard Creek, which is also a recipient of funding from the Public Arts Grant. But this, the project goals for this were empowerment, healing, teaching critical literacies, building community, creating a space for women to come together to discuss their common problems, and to facilitate civic engagement, because part of that conversation is to create active, autonomous beings that are able to engage in a participatory democracy. But it also benefits families and communities in that way. The target audiences were women, specifically women who mother, because they have multiple roles, and they oftentimes suffer from role strain, especially women who mother in poverty. They're dealing with their own children. They may be caregivers for other family members, and this is especially true of African American women. 70% or more of African American children are born into single mother households, and so this is a particularly important group for me to work with. The topics we discussed with the women at Courage Connection, which is domestic violence, but this is also something that could be done in a community of women suffering from grief and loss. The women in Chicago, we had administered a survey to see how many people they knew who had been killed in neighborhood violence, and some of these women knew as many as 10 people who had been shot and killed, and some of them were members of their own family. We wanted to discuss school issues and parenting. Last week I was in San Jose, California, and I did a workshop with some women there whose sons were in a rites of passage program, and we discussed issues of parenting. The major question was, how can art, history, and culture save black boys? And so these are some of the craft projects that they came up with. They made these bracelets for their sons, and as they made the bracelets, afterwards they talked about the particular characteristics of their sons, their strengths, the weaknesses, their aspirations for their sons. So we used art in that way. With the Courage Connection project, it was a 4-week curriculum, 90-minute classes each Tuesday. There were roughly 8 to 12 women. We started off with maybe 8 by the time the last week we had 12. One of the counselors said that women who leave the program are welcome to come back for these sessions, and a lot of the women that came for that session had left the program, but were coming back specifically to do this arts-based project. It was ethnically diverse group of women. The first week we talked about self-love. They made what I called self-love bracelets. We talked about vibrational medicine, chromotherapy, colors, using colors. We talked about symbolism, and we ended that session with some drumming and song. The second week, we made memory wire bracelets, and we talked about the remembering body, how stress affects the body and also can affect future generations. The third week, we did a review. The fourth week, I actually talked to them about crafting this entrepreneurship, because a lot of times women in domestic violence cases, as well as women who are living in inner city areas, what they need is to earn more money, living wage jobs, or participation in the informal economy with whatever they can do. And so crafting became one of those outlets that could actually lead to self-sufficiency. These are some of the bracelets they made during the first session. And I believe the first week, maybe I had one woman who had participated in crafting before in their lives, but these were done by women who had no experience. And afterwards, I asked them to tell me how it made them feel, and these were some of the words they used: fantabulous, focused, happy, tranquil, thoughtful, present, and content, great, like I accomplished something. And afterwards, one of the counselors brought me a note, and she said that during a session with one of the women who had attended, this is what she told them. She said, "I told my roommate about our bead making class and how the colors represented different things. She said, 'That's not empowerment from abuse.' I said, 'Oh, yes, it is. It gave us something else to think about, a different way to think about ourselves other than being abused. It was very peaceful.'" So again, developing critical literacies through the arts. We discussed the therapeutic value of the arts. Again, I had done some research and found that crafting actually lowers cortisol levels. And what is happening, scientists of numerous studies have found that African Americans are having their lifespan shortened because of high stress. It's like, as one scientist put it, revving the engine nonstop all the time. I've called it the chronic traumatic stress syndrome. It's not post-traumatic stress because we never get beyond that. It's constant stress. And so it impacts the body. So I talked to the women about that and epigenetics and how stress can actually affect future generations: diet, stress, depression. So we use crafting as therapy. And this is one of the bracelets that the women made. When I posted this online, I had several people ask to buy it. And I went back and told her, I said, "You actually have people who want to buy your stuff." And it just, I could see the change in her expression. She got so happy. She said, "Really, somebody wants to buy something I made?" And by the end, she had considered herself a crafter that was getting ready to go into business. These are some of the other bracelets. The one in the corner with the orange, women come in with a lot of, again, role strains. And so she came in with the attitude, "I don't really want to do this." But after she got started, hers was one of the better bracelets because it opens up spaces in them. These are some of the other items that they crafted. These have actually gemstones, and so I told them what the gemstones represented, and they chose them based on what they felt that they needed to strengthen their own personality. The last week, we talked about waist beads, which is an African tradition. It's an African body adornment, but I talked about it with them because a lot of times women feel that they're not attractive enough, that they're not beautiful. And so I wanted to get them to think about whatever skin you're in and whatever size you are, that we have to love and respect our bodies. And so that was a conversation we had prior to me talking about crafting. I gave them all the information about the tools they would need, where they could buy the supplies. We went and we looked at websites like Etsy and Pinterest to come up with crafting ideas. I gave them a budget, told them how they could make a $60 investment, turn into $200 worth of profit by just buying these base materials and some bulk beads. And so and to talk about reinvesting and investing. I also told them how to use their smartphones when they went into the store to do a Retail Me Not in Hobby Lobby or Michael's, so that they could do this on a budget and with discounts. And so these are some of the pieces they did for their last project. I found that even though I was talking to them about entrepreneurship and I told them that they could make something to sell for their last project, many of these women were mothers, and so they were more interested in making something for their children. The pink bracelets was a mother making a bracelet for herself and her 2-year-old daughter. So they were more interested in something for their daughters. And even the waist beads in that last slide, it was a mother who wanted to have this discussion about her teenage daughter's body coming into her womanhood. And actually, this was a tradition that they had started in Africa. I gave survey afterwards, participant feedback, And I asked them, one, to rate the experience. 9 out of the 10 women rated it a 10. I asked them, was the information that I provided helpful? 10 of them said yes. I also asked about their levels of stress. Some said, at least 9 of them said that they suffered from stress. 6 said they felt like they suffered stress daily. Depression was nearly the same, that 6 of the 10 admitted being depressed. 3 said that they were depressed on a daily basis. They rated crafting as being fun and relaxing. They would recommend it to others. And while only 3 of them were currently crafters, they were doing things like mixed media, glass jars, and scrapbooking. By the end, like I said, a couple of other women, just from that experience, defined themselves as crafters. The value of the project, I asked the women what they liked most about the workshop. They said making something I can sell or give away, allowing each individual to be creative, ability to do your own thing. One person said everything. It shows me how to make things. The instructor, reflecting on what we are making and how it makes us think. Openness, help, and ability to be creative. It was very therapeutic, very laid back. There was also benefits to staff. After I did the project, I also gave the staff an assessment, and she stated that she would like to have more arts programming in Courage Connections, maybe painting or some other type of arts activities for the women. But it was a positive example of artist-community arts organization collaboration. I also wanted to add as an aside that I'm not sure whether Urbana is dealing with the My Brother's Keepers funding, but with the program that I was doing in California, the idea is to expand My Brother's Keepers money to include women and girls, because these boys are coming from mothers, and the young girls will one day be mothers themselves. And so we need to figure out ways to try to help and uplift and rebuild them. And I personally, as an artist, I think that arts is a great way to do this. And so we just need to find the funding to be able to work with women and girls in these traumatized communities. Thank you.
Well, thank you. Questions for Dr. Davis? Eric.
I don't have a question, but I'd like to comment because, you know, as the council representative on the Arts Commission, I and all the other commissioners hear reports every, you know, at the conclusion of each grant. And Dr. Davis's report is unusual in a couple of ways. It's unusual because it combined art with therapy, and because it involved a collaboration with a social service agency that we have contributed to. But more importantly is the way that it's similar to many other projects. It's exemplary of where of the great bulk of the Arts Commission projects that are aimed at empowering some group within the community to do art, whether it be crafts or visual art or performing art or poetry or, you know, whatever. So we have a very skilled practitioner who is a focus for empowering community, and over the years there are hundreds and hundreds of people whose lives have been enhanced and probably, you know, in a long-term basis. So although when we enter the city building, we pass by the big sculptures, that actually is not the major part of the Arts Commission activities. The major part of the Arts Commission activities is projects. I mean, this is you know, an outstanding project, but it's exemplary of many projects in terms of how it empowers community members. So so this was why I you know, obviously not every council member is going to have time to hear all of the grants presentations, but I did want you know, folks to see one special one at any rate.
Others? Mayor?
Yeah, that was a really great report. And it was the purpose of the Public Arts Commission not just to create works of art, but to involve people in art. And I think that's a wonderful thing, adults as well as children. So thank you very much.
Excuse me, and thank you again. Excuse me. When I did the research, I found a lot of programs that were directed towards children or other marginalized communities, but there's not a lot of programming that goes on for adults, and I think we need to increase that.
Well, I would just say that I know someone who's probably dealing with a lot of stress these days, and we're going to find a way to get her to do some jewelry making as well so she can relax a little bit. And maybe I'll have to buy less, too. But I think it would be very good for her, actually. Thank you very much.
Yeah, but I know someone who doesn't have as much stress as she used to. Maybe she'd like to do some crafts also.
Okay. Well, with that, thank you very much. Now for a little stress for us, I'm afraid. Yeah, come back in about an hour. We'll probably need a little therapy. This is the presentation on the annual finance report. Elizabeth, if you want to introduce your guest, I'd appreciate it.
Yeah, I get the easy part. Our new audit firm that started this year is Baker Tilly, and this is Mike Malott, who's a manager with Baker Tilly and works almost exclusively on government audits, so has a lot of experience in this area.
Just want to thank you for having me today to present the draft financial statements to you, along with the second report, our communication to you and to management on some certain items we identified during the audit this year. I guess the first thing I want to do is really thank Elizabeth. I know she came in the middle of the audit, which is always very difficult, especially when it's with new auditors on top of that, which makes it exceptionally difficult. And she really is the reason we were able to pull things together and continue working on this and getting this done and being able to present this to you today. It was a monumental effort on her part and Sophie and the finance and the accounting team to really let us do our work, because we can only do as much as they allow us to do, and they really put a monumental effort into letting us kind of work through this year's audit in difficult circumstances. So I really want to thank Elizabeth and her whole team first. But so what we have for you today are draft financial statements. Now, our expectation is to issue in the next couple weeks. There are certain things related to some of the items I'm going to talk about, which is why they haven't been issued yet, that need to go through certain things related to our audit standards, our firm's requirements just for quality control, things like that, that I won't bore you with. But the first thing I want to present to you is a smaller report. And this is the communication to those charged with governance and management. And really what it is, it's a accumulation of a couple different letters that we're required to give you every year. The most important one, if you open to the table of contents, wherever that may be, really is the first section. And what that is so during the first stages of our audit is what we do is not only look at your numbers, but we look at the kind of controls and the processes in place around your most vital kind of transactions. So your accounts payable, your payroll processes, things like that. We take a good look at and delve into kind of how those operations work, because those are your highest volume activities, really, and present kind of the greatest risk to you in terms of errors in presentation of finance statements, potential misstatements of any variety. So we always take a look at that to identify any risk areas to the city. As you can see, there were a number of things we identified during this year's audit, and I'll briefly go over each one. There are some that are clearly a little bit more important than others. Some of them are things that are going to take maybe a couple years to alleviate, as there is a lot of work that Elizabeth and I have talked about, and she's put together a pretty comprehensive plan, at least from our discussions, if not necessarily summarizing this in here. And for each comment, she did provide kind of a management response, either for things they've already done or things that they're planning on doing to address some of these items. Just kind of getting into it, one of the first things on page 2, kind of the finding here is related to external financial reporting. I know one thing in the past is that the city always prepared its own financial statements and all the other statements. And I know, obviously, with the significant turnover in the finance department, that wasn't possible. We came in, and it's always a great, big burden on a changeover in the finance department to be able to kind of pick up some of those things, especially given that there's been a number of turnovers in those key roles. We prepared the finance statements on behalf of the city. It's very common for us to do this. I'd say 90% of the municipalities that we audit, we prepare their financial statements for them. Given that there are some items that we changed from the past, it's kind of a presentation of there is risk associated with us preparing the finance statements. We're not here every day. We don't see everything. Now, in the future, as Elizabeth is in the role all year and as of has a great say and a great understanding of the city as she's kind of become part of this organization, this is kind of finding that will be alleviated because the risk isn't there because she's so hands-on. With everything that's happened this year and us preparing the number or the end result and then product, it's just one of those risk areas that since we're not here all the time, we're presenting it basically after doing what amounts to a month or two of work, on and off. We're not going to necessarily catch every little item. So that's why we present this item as a risk. Now, again, everybody has this. The vast majority of communities do require their auditors to prepare their financial statements for them. So it's not an uncommon thing, but just the first thing we identify. The big one here is the next one on pages 3 and 4. There were a number of items we call restatements that we identified in the course of the audit. And basically what those are is that part of our procedures when we come in for a first-year audit and a transition in the auditor is we take a look at what was done in the past and in the prior year. Since we actually place a lot of reliance on those beginning numbers for the year we're auditing, we need to make sure we're comfortable with how those numbers came to be. In looking at prior work papers, just doing things in the course of what has been done for a while in terms of presentation of things in the finance statements, we identified really what amounts to 5 bullet points here is to major changes in terms of dollar values that happened during the year. A number of them related to kind of more how the property taxes were presented. And a lot of this stuff is more accounting stuff than rather how the money flows or anything like that. It's not operational. But when you think about your property taxes, you guys, part of your levy is the pension levy. One of the things, the way it's been presented in the past, is that it's always presented as the pension's revenue. Really, it's the city's revenue. You levy that money, and then you give it to them as a contribution. It's things like that related to the first 2 points. It's more the timing when you recognize that as your revenue, because if you don't, if you levy a tax, first installment comes in that fiscal, one fiscal year, the second installment comes in the other fiscal year. There's kind of a truing up of what that money is being used for. You want to see generally the revenue is going to be in the same period that it's meant to be used for on the property taxes. And with Illinois, the timing of when the liens placed on property and that kind of stuff gets a little wild. So there were some changes there is some significant guidance out there that tells us how it's supposed to be presented, and there are some changes related to that. Another one was there was a standard that went into effect last year. So for it should have been implemented for the June 30th, 13 financial statements related to the presentation of what we call component units. With Illinois cities and the way the city is set up, that means the library, the Banner-Free Library, or any library of any city really, is presented as what we call discretely presented component unit. When you look at the statements, there's kind of your first set of statements is very consolidated. It needs to be presented in its own section by itself and not in your kind of more fund statements, which is kind of how you budget and things like that. In the past, that's how it was done, which was correct in the past. It should have been changed last year. It was changed this year. That's one of those items. And again, that's more of a shuffling of the deck to some degree in terms of where it's presented, not necessarily whether it's in here or not. It's just where it is and how it should be reported in the report itself. The first one on page 4, this relates to, I think, an item you've had reported for a while. It's called a property tax held in escrow liability, or it was a liability in your general fund and in your TIF 3 fund. There are 2 items in there, and they're fairly large dollar values in the liabilities. And we did some really work trying to gain an understanding of what this was, because it was related to obviously some certain stuff that's been going on. And we worked with the legal counsel and the people who have been working on that. And really determination comes to that it didn't meet the definition of a liability. And really, although there have been distributions out related to this process over, in the past, the amounts that have been recorded as a liability really don't meet the definition of that in accounting sense. There are certain criteria it needs to meet, which really, from talking to the attorneys who worked on these intimately, told us it really didn't meet that standard. There are certain things like if it's probable to happen, and they're really sometimes vague terminology, but really it didn't necessarily come to that level and probably never should have. So there was some money in your TIF 3 fund that now is closed, obviously, that is now being presented as still a liability, but a different type of liability in your post-TIF 3 escrow fund, which you'll see in the finance statements itself. Basically, there was about 11 million, I believe, at year end that had always been presented as a liability that really wasn't. So when the TIF 3 was closed, there was about an excess of $11 million in that fund. But as a TIF is closed, you know, that money gets restricted and is supposed to be used for TIF purposes. So that gets held in a liability for something else. So basically, it should not have been presented as a liability in the past. So you had your fund balances were being understated in both the general fund and the TIF 3 fund going back a few years related to that item. That was probably the one item I would say that was, you know, most of these items are where things are presented and how they're showing, not necessarily what they should be or not. This is one that probably shouldn't have been presented in the past. So that one to me would be the most important one in terms of the restatements. And then the last one related to kind of the measurement of the compensated absences, which is accrued vacation and sick time and things that are, in theory, would be paid out to an employee if they were to leave on that day. There was one item, one piece of that process that really wasn't a liability of the city and the way it's paid out and what kind of work period it relates to, that it's not something that really should have been accrued at year end, and it shouldn't have been. Basically, it was an overcalculation of what the amount should have been by a few $100,000. So it's just, again, an estimated liability on your big NDY financial statements, but again, a change in the way that should have been presented. The rest of them are more related to processes. Again, a lot of these have actually been addressed to a significant degree already. Some are still in process. Some I know Elizabeth and Sophie have been working on really ways to address them, alternative ways maybe that maybe not necessarily work given the number of people who are involved. Related to segregation duties, in a control environment, you want to have certain processes you don't want done by the same person. That's not always, that's an ideal world. You have one person taking an invoice in and entering in a system, another person approving that completely independent of that, another person generating checks or going through the various processes along that. It's not always going to happen. In an ideal world, you'll have different people in charge of those processes who are not related or have no access to any other area of that process. In the real world, there are people that people have multiple roles and multiple controls over those processes because of just practicality to some degree. Also, sometimes it's just a matter of not really looking at those processes over a long period of time. People shift roles. Maybe someone leaves, and another person in that group just picks up the responsibility. It never gets really examined again. So there are a couple things, primarily in the payroll process. I think a lot of the responsibilities are being placed on one individual, which in terms of a control perspective in a theoretical sense is a risk because it's one person who's doing the whole process. And even if there are reviews and controls in place, it's not the perfect environment. Ideally, you have multiple people working on those processes. So that's where it describes in here just the specifics of that, what those responsibilities are and why they should be broken out in a perfect sense to kind of mitigate the risk of one person having too much control. The next one on page 6 was basically a kind of more review and access, really, to certain things on the back-end process. There are the bank reconciliations done on a monthly basis. One person, again, and it's more of an independence in segregation of responsibilities. One person does it, another person reviews it, and they can't switch roles. One person can't just pick up a bank rec and do it one month or approve it. And that is something you want to have some really good control over because the bank recs, a lot of degrees, that's where your cash is, and you want to make sure that you have a good handle on that. So that was something that we noticed that there really wasn't, although the recs were being done and they were being done correctly, there was no review process around them during the course of the year, or a consistent review process that we could see. Kind of tied to that and why we grouped them together is journal entries. There's a great deal of access to being able to, for people who have access to the accounting system, can just post entries. And there are certain elements of the system that you can identify yourself as to who's posting it. It's not just automated, so you can't just automatically go in and see a name, a little initials next to it, and automatically know for 100% certainty that it's that person because that number that identifier can be manually changed. The combination of the two, if you think about it, someone can do a bank rec and then do something at the bank rec and then go in the journal entry system and post something in the journal entry system. That's why we put them together. They're kind of tied together because they're part of your month-end, year-end close processes to make sure everything is correct and accurate. And those are the two biggest elements of that. And there's just more of a tightening and a kind of a formalization of the controls around that would go great way to kind of mitigating kind of risks. And again, this is not to say that anything was done wrong in terms of during the year or we identify anything specific. It's just these are things that you can do to kind of protect yourself as a city, and really for the employees to protect themselves and make sure they're doing the right job and doing it correctly, and having people make sure that they don't miss anything. Having that separate set of eyes and the formalization of that, I know, goes a long way to across the board making things just a safer, more secure environment. And then the last thing on our kind of major points, second to last one, again, kind of relates to the segregation duty ones. That's more to the cash disbursements. We broke the various main cycles out. It's similar to that payroll one I just talked about. I won't spend too much time. Primarily just certain individuals having too much access and too much control over the individual process. The last one here relates to the IT environment. So one thing we do, not on top of looking at individual kind of cycles and processes, is kind of the overall. And one of those is kind of the information technology. That's obviously a big thing just for everything nowadays with the technology that we use and we rely upon. And there are certain best practices that have been identified that really help keep that information that you have, your financial information, secure and not and limit that access to only people who really need that access, and make sure that the information maintains its kind of, I guess, validity and accuracy at all times. There are a number of items and best practices we identified on here. I think another idea is that there is, because it's a custom-built system, over time, there are certain uniquenesses to it that actually, have served their purpose, obviously because they've been used for that purpose for a while and have done good things, but they also are, in terms of a control perspective, present a risk because it is an intimately familiar process that if something were to happen to it, there is not the infrastructure you normally see in internal control or in a financial reporting system that you normally be comfortable with. Now, there are a lot of good things about it, too, that have been helpful, but in terms of risk, there are a number of things on here, I think, to take a look at that kind of as an auditor's perspective and being the definitely the conservative approach in our minds in terms of how we look at these kind of things. It's an area of, I'd say, to be cognizant of that there is some risk associated with the way some of the practices are right now. Going from here, there's a couple other letters. They're pretty much, a lot of this is something required communications we need to make to the council and the mayor. I work for you guys. I know I work with Elizabeth, primarily, but you hired Baker Tilly to be your auditors, so we really report to you. And one of the things we want to make sure, and I think this is part of governments in general, is to just let you know that if there's anything of concern related to the audit or questions you have, that the door is always open and we work for you. If ever there's a question, you can communicate to us. That's one thing we always want to make sure that you guys are aware of, is that that's part of it, since we, as you see, all our letters are addressed to you as the council and the governing body and the mayor. So it's just something we need to, there's some communications into our responsibilities as a governing body, your responsibilities, management's responsibilities, and kind of some things just so if you want to know a little bit more about kind of the process and certain things that are involved with the audit that we're required to follow. There's some information in here on that. Starting on page 12, there are a number of other kind of recommendations. So these things are things we identify but don't meet kind of the level of, I guess, I wouldn't say severity, but there are certain kind of terminology we use to identify the level of what we consider it's, I guess, the degree we consider these findings to be. These ones in the second section here are more, not things we are required to report to you, but are things we think are good for you to know and then to make you guys aware of what is happening and things we identified and things that are being worked on to be improved upon by management. Some things like a vendor maintenance policy. I mean, these things are fairly common, is that there's, one of the things we do see is that maintaining a very strict and well-maintained vendor listings of knowing who your vendors are and who you're paying out. Those are kind of things that really just limit the risk that you're exposing yourself to. Things like that. Formalizing. A lot of it is formalization of processes that might already be in place, but kind of getting that down. So if there is something, a turnover, when Elizabeth comes in, she already has these policies and controls and procedures in place. She knows what's being done and she knows what to follow. A lot of these things relate to that. Just knowing it, kind of the passing on of that institutional knowledge is a really vital thing. I think that's where a lot of these, you see a trend, is more the formalization of that and putting that on paper and in writing so that someone else can pick it up. The next person can come in and see it and say, hey, I know what I can do or what I need to do, and can do following the processes that have been done. Again, some of these are review procedures. There's something, the capitalization policy, I think in the past had been, there really hasn't been a formalization of that in terms of what items and what purchases are we considered capital for an audit perspective. There are things like outstanding checks that have been out for a long time that probably should be, we identified maybe something to look into following up on, and whether it's unclaimed property or anything like that. Again, more things that let you know about, but nothing major. Then there's some other stuff in here that I won't go into too much detail with, related to kind of the upcoming accounting things that are happening down the road. Really exciting stuff, at least for me. The only one that really applies to the city going forward, not this year but next year, is the first one. Basically, what happens this year was there was a new audit standard for the pensions, and it really changed pretty much all the notes they disclose, all the information they disclose in their financial statements, the actuarial valuations they get that determined a number of things. The guidelines for that have changed drastically. Next year, the city is taking those things and putting a liability on the financial statements, on those entity-wide consolidated financial statements. So basically what has happened in the past, and look at your financial statements, there's been this what's called a net pension asset or obligation. And what it was is the actuary would identify kind of a minimum contribution amount every year, and then the city would levy and make that contribution. And the surplus or deficit in that was kind of cumulatively tracked and called this. So I think the analogy I use is if you think of a credit card. If you have a $2,000 credit card bill and maybe you owe $200 on that minimum payment. If you only pay $150, you're $50 shy in that minimum payment. That's what you would record as your liability. Or if you pay $250, you record an asset of $50. Going forward, it's that whole $2,000 or whatever you haven't paid, that $2,000, that total liability that gets reported. And so when you look at the financial statements, there's your required supplementary information section has some funding progress on both IMRF and the police and fire pensions. There's an item called the unfunded actuarial liability in there. Basically, that's the number that's going to be on your entity-wide statements going forward. And it's a big number. Right now, you guys have an asset, and you have some smaller numbers on here. In every community in the state of Illinois is going to be having these large liabilities posted next year. So it's just something to be aware of. It's not going to change really anything operationally. It's just more of a matter to align governments with how really the rest of the accounting world has presented pensions for a long time now. Most corporations, or all corporations, will put their whole pension obligation, everything that they owe that they haven't funded, and put away onto the balance sheet. This is basically what this is going to be doing going forward. So it's a big item. It's a big topic. I know for us as auditors, it's been a huge, huge, huge issue for the last couple of years, really getting ready for it. So that's just something to look forward to in the future. They like to keep us busy with new things. Currently, there's not anything really that's going to affect you beyond that. I mean, that's a big one, but there are some things maybe down the road that might change some things in how governments report, but that's down the road, and hopefully it won't be too big. The rest of this is, again, just more informational stuff for you guys. So that's really that report. And I spent time on this because it is the most important thing, I think, to this year's audit. There were a lot of things that we identified in the course of the audit that were, I think, that we were concerned about, and we identified it, and that's why we've passed on, because we want to make sure that you guys are safe and doing the right things and protecting yourselves as a city.
Questions? I think Mayor, then Diane.
Yeah, we are in the process of modernizing this system so we can understand it. But my question is about the fire and police pensions.
Yes.
Do most cities have that just done through the city audit? Because ours has their own audit, and they seem to be in conflict with what you're doing. So what do cities typically do?
I'd say it's more often it'll be corporate cities, but not always. I'd say it's maybe 2/3 where it's incorporated into the city's part of the city's audit. They don't even have their own separate financial statements. But then there's a good number that do have their own audit. Some of them have their own separate reports, like your pensions do, but then they have them audited by the same auditors. some of them do have their own auditors as well. I'd say not as many as there used to be. I think there has been more of a consolidation of that effort. A lot of it is probably more cost savings than anything else, I think, especially in terms of some of these individual pensions realizing they don't need their own financial statements anymore. But that's their determination as a pension board, obviously. That's as to whether they want to have that. I think we've seen the shift more towards that all being incorporated in part of the city's financial statements or villages or whatever municipality it may be. They generally tend to be more often than not consolidated into the city's statements themselves.
Thank you.
Diane?
Thank you. I had expected this report to be a wake-up call, but for me, it was a shock to the system. So I appreciate your thoroughness in doing this. So my question relates to, and what was especially stunning to me was this issue with the segregation of duties with regard to payroll and vending and purchasing and all the basic functions where money changes hands, and there didn't seem to be the normal checks and balances that you'd expect to have. So I know that, and that was not just a result of the couple years of chaos in the finance department. This has been going on for a long term, I understand.
I mean, to the best of my knowledge, because obviously we came in after
Right,
all the
okay.
chaos and
So,
stuff like
so my
that,
question
but,
is, I
yeah.
saw the response from, I assume it's Elizabeth's response to you, and are these changes that she's described, that you've described, are they sustainable? Are these short-term fixes, or are they something that we're going to have to address on a more long-term basis going forward? And the other thing that was especially worrisome to me was the vulnerability of our financial management software. What is the long-term outlook for that?
Okay. When you talk about segregation of duties and changes, I'm not sure specifically what you're referring to, but I think
Well,
what
page
you're
5, page 6.
Right, but you're
page
talking
7.
when you talk
Yeah.
about the changes and are they sustainable. So
Yeah.
one of the comments I made is that we need to look at how the work is assigned to the staff who perform those functions. And so as we do that, and we have been working on that already, what we will do is, for example, we have one staff person who primarily handles payroll and one person who primarily handles accounts payable. What's likely to happen is that we will reassign work so that they're both sharing parts of those processes, so that, for example, one person won't do the entire payroll process from beginning to end because we'll take that other person and we'll insert her at points in that process as a control, and then the same thing will happen on the other side. That person who does accounts payable, for example, will be inserting that person who now does payroll into that process at certain points. So no one person will control the whole process from beginning to end. And yeah, I think that's sustainable. It's not more work necessarily, it's just a different organization.
So it's a reorganization within.
Yeah, it's just a change in how we assign the work to those people. Is that what you were?
Yeah, I'm just
Okay.
wondering what it means in terms of staffing long term and
Yeah,
that sort of thing.
and I think to Liz's point, and we've had a number of conversations about kind of what I've seen and what we've seen is not a firm at other municipalities that have, because sometimes some of these are staffing limitations, as you said, in terms of you have a certain number of people, you need to be almost creative in a way to how you split those responsibilities up and what kind of alternative outside the box controls you can put in place that maybe aren't the perfect control, but are really good and can really limit, in lieu of having the perfect system, this is the next best thing. And I know we've been talking about that and working on it, and those are sustainable. And we've seen a lot of places that have had similar commentary to this really over a period of time have used that kind of, the exact same situation, used these kind of long-term, continual planning and changing and reorganizing, and have really eliminated and mitigated all these risks here in the past. So it
And-
can be done.
Okay, and then the other question was with regard to the financial management system, the software.
Oh.
Yeah, we have been discussing with this, and I know this is a project that the mayor is very interested in. There are many issues with our financial management system, and some of them Mike pointed out. One of the issues is that we do much more manual work than is necessary, and so I think actually making a change there will help us to address some of these other concerns, because we'll probably have the time to sort of, put our house in better order. We are planning to include in the proposed budget some funding to look at making a change, going to a more standardized financial management system. And that will probably mean some changes to the way we do things, because now we have a system that's built around our unique processes. We will have a standardized system, and we'll be modifying our processes to work with a standardized system.
Okay, can I have one more? I was confused by the outstanding checks. Is that checks that the city has written that haven't been cashed, or checks that are owed to, or that, I mean, what is an outstanding check?
They're checks the city has written that have not been cashed and have been outstanding for more than a year.
And what are they total? How much is that total?
Oh, gosh, I can't. You know, I could look
Okay.
that up for you. I can find that information.
Yeah.
I don't have it on me, though.
I don't think it was a very large number. I think honestly that probably was one specific item that was related to all this transition and turnover. It was just something that in the mix just didn't get done. It didn't get followed up on.
Okay, I think Eric and
Yeah, so I have a couple of questions. I think I know the answer to this. I think it's implied in what you said, but I'll ask anyway directly. Will putting the necessary controls, dividing the work differently so that there are a couple of eyes on payroll, there are a couple of eyes on other kinds of, on journal entries and so forth, that does not necessarily involve additional personnel, a larger staff than you have. Is that correct? Do you think you can do this with the staff that you have?
I think we can do this with the existing staff, yes.
Okay. I think the monthly statement of cash disbursements is a fantastic idea. I think it would be so good to be able to see the cash flow as it is flowing. So that would be great. I have a question about the pension funding. So as I would understand it, the what we ultimately will owe to the currently active people is a liability. That's that incurred obligation. On the other hand, that should be matched against the assets that are in the pension fund. And will we also see those assets so that we can see how well those things match up with each other? It seems a really important part of the equation.
You're right. So the presentation of the pension funds as they are right now, in terms of their own little statements, there's just the assets, that's not going to change. But the liability that is presented is basically your, as you said, the total obligation. It's the net number of those two. So although you won't directly see the assets of the pension, it'll be netted into that liability number.
Okay, so the liability, so as a liability will be the difference between those.
Yes, it will be.
And do we decide, who decides on the investment strategy of the pension fund? Is that, do we do that in-house, or do the police do it, or the fire people do it, or who does it?
The pension fund trustees, and I'm one of them for both of those pension boards, makes those decisions.
I think it would be very illuminating for us to get periodically financial statements of the pension fund so that we could see the investment distribution, we could see how the fund is doing, and so forth. I would be really quite interested in that. I understand that you have I mean, this is really a hard job because you have to balance risk against return, and there are all kinds of risks. There's interest rate risk, inflation risk, equity risk, and so forth. So I'd really be interested in how that's being done with respect to the funds where we're kind of holding the bag for how they do.
Yeah, I think I can get that information for you.
Dennis.
With a person who doesn't have a background in business and a depth in evaluating financial planning, estate, and or city finances. And a person who just is on a city is a city council member who sits on the seat but doesn't do a review of practices to the depth that people who are in the office and are hired staff do it. Your report is very interesting to me. I don't know what kind of you're reporting to us as the city council members, but we have varying degrees of resource and education to be able to respond to you. But that said, I appreciate the fact that what I see is a really more nuts and bolts, real clean advisement here of the situation and how it's changed, because we've had a rather gray area of financial handling in the past, which has led to certain problems. And I wanted to ask you, these people have brought up, other members of the council have brought up good questions. I wanted to ask you a little bit about your statements where you were concerned about the listing of the TIF3 funds and how the funds that were being held in escrow for various reasons, which you said may or may not be actually truly liabilities. How we evaluate that, because our activity with the TIF funds is related to, and also the income of the city is related to property tax that is, being litigated, and the litigation is going on, and there's different levels of, interaction in the courts. So, how do you determine whether something is, if something can be held in escrow and whether it's really a liability? Are you saying that there's more funds available that are freed up and there are no longer liabilities, but they're part of our actual fund, available fund balance? But how are they not somehow encumbered?
So there are a couple pieces to that, I think. So maybe I'll try to take on one by one, because the general fund and the TIF3 fund are kind of two different situations, even though they're kind of related to the general litigation. So maybe I'll take a step back. Sorry. Often there is litigation involved with property taxes, especially when you have large entities in your area. Very rarely, unless a settlement or a final determination in court has been made, general practice is not a liability, because it's really property tax litigation is just kind of the course of business in a lot of ways. Now, this is a unique situation to some degree because it is such a large organization and everything that's going on. What we do to determine whether a liability exists related to property tax litigation is we basically work with the attorneys who work on that. And they basically tell us, there's two things to record a liability. It needs to be measurable, so they need to know how much it's going to be. An estimate. It doesn't need to be the exact number, but within a reasonable range, you need to know how much it's going to be. And then the other one is if they consider it to be probable. There is varying degrees of what probable means. Generally, we rely on the attorney's determination of what that means. And they often, what we do is we communicate with the attorneys related to that, and they will tell us the current status of the case, give us some background information, and let us know if this is what they consider to be, what their current assessment of the end result is going to be. A lot of times, the attorneys can't determine that at the time. That was kind of the case with these, is that there really wasn't a determination of how this was going to end, and how these items were going to end. So, then talking to that, going back, is that there probably never was a state, although there have been distributions in the past, my understanding, is that the current things out there and the current items that were recorded as a liability, they really were at the part in the legal proceedings that they couldn't really be called a probable outcome of you paying that whole amount out. Because the way it would be recorded was basically every property tax that was paid by those entities plus interest. And there was no real, in terms of an auditor, we looked for what's the justification for that. Okay, well, how did that number calculated? Why is that number right? And the expert on those is often the attorneys, because they're the ones dealing with this in court and dealing with those other entities. So that's kind of how we come to that. We really work with that attorney and get their professional assessment on where the potential outcome is and where that case is at the time. With property taxes like this, again, these type of cases exist fairly often. Now, again, not to this scale necessarily, but that's where we came from in identifying it. And after talking to the attorneys, the two separate attorneys that we spoke to said, this is the current status of the case. One of them, was at a point so early in litigation that, You couldn't justify it. They wouldn't be able to give us an opinion as to whether this is going to be settled or the city's going to win. They couldn't give any determination. When that's the case, it does not meet the definition of what we call a liability. There are certain other things where we can disclose information. It didn't even meet that where we are required to even disclose it in a note to the financial statements. There are other little layers in terms of definitions of what things meet, which we rely a lot upon and what the attorneys tell us. And I know the attorneys laughing, is that we do place a great reliance on their expertise to some degree when it comes to this. In terms of the general fund, that piece came off the books entirely. That's why that liability. And I think some of the confusion is there really is calling it an escrow. There is no evidence of an escrow account anywhere. And that's really one of the main determinations that was our understanding initially is why it was being reported that way. That money is just being held in city accounts that the city has access to. So really calling something an escrow, just in itself definitionally, didn't meet the definition of what we call an escrow. That would be limited access for a specific purpose. You can't touch it for any other reason. That didn't exist.
And is that a feeling that the city should be rectifying? Because would it be better and smarter for us to actually create a true escrow account for this? Or are you just holding it in our general fund? Sounds like it's inflating artificially the money that we have available.
That would not be. That would be more of a legal question than it would be for an auditor.
Okay.
Unfortunately. I can't really answer that one.
Then I have one more other question, just one. I appreciate the fact that you're detailing a lot of ways of being more accurate in reporting and having cross-checking. How does then transparency and the need for the public to see in a very transparent way city financial statements or condition relate to the need for, I don't say secrecy, but I mean oversight? And so at what point does public transparency of what's going on enter into the play of the control levels that you would like to see being done and incorporated into the city financial process?
I guess I'm not sure. Sorry, I'm not entirely certain.
In other words, I guess maybe the answer is that once the financial statements have been completed, the transparency then is when they're posted.
Yeah, and I think there's a couple things we've made recommendations on. Obviously, with the financial statements, you're required to post them when they're issued, and one of the things we'll be rectifying in the future is we'll be obviously issuing it on a more timely basis as we've kind of made some of these adjustments and cleaned things up. That will go a long way. I think also one thing we've discussed, I don't know, is in terms of presenting more information monthly. I think that's more of a long-term, I don't know, Elizabeth can speak more to that, but providing you more information as things get cleaned up in the process.
Yeah, so I mean, we've talked about, monthly or biweekly, or not sure what schedule yet, reports of all of our cash disbursements. So we would start reporting on all of our payables and our payroll expenses. But ultimately, it will probably take a little bit longer time. We need to have some kind of standardized format for just reporting our financial condition, not this complicated, to the city council. And when we do that, obviously all of that is public information when we do that. So,
Mayor?
We have township that's coterminous with the city, and the city council's the town board, and they've got a separate audit. So what do other cities that have coterminous townships, how is it treated? Are they usually included, or are they done separately?
They're kind of a gray area, to be perfectly honest. There's not that many of them. Some of them are presented independently. Some of them are incorporated. There's an assessment we go through. We have this giant checklist we go through related to that. A lot of the driver is what we call materiality of that. If it's not of a significant dollar value, one of the first things they say is not to include it. Now, if it had an undue effect, alternatively, if it was a large organization in terms compared to the city, where it is thought to be not representative to not include it, we would include it. We did do an assessment in the very beginning when we first came out for our kind of an initial kind of touching points before the audit began, and determined that it wasn't necessary to include it, and that would be consistent with prior years.
Thank you.
Other questions? Bill?
Yeah, thanks for doing a very thorough job. I too was looking forward to it, like Diane, and a little worried about what I'd see, and I stayed up several hours past my bedtime Thursday night reading it. But I was not shocked. I was a little bit relieved, actually. Maybe I'm more of a pessimist or something. I don't know. But I thought it was really well done. I did have a couple questions that hadn't been covered yet, I don't think. Well, as far as the additional reporting to council goes, I know we've never approved the bills like we do at the township meeting, and I don't know if that's real useful to just approve the bills. So I think it would be helpful to have a little bit higher level analysis type report as you're thinking forward how to do that, either monthly or quarterly, just something so that we can see on an ongoing basis, if we're taking in less sales tax or paying out more of something. So maybe not just bills, but also revenue. That would help me personally. I know I've looked through the trial balances and stuff that you post online, and at least it's all out there, it's all public, but it's really hard to really get much management type information out of those. One of those things we used to get, and that I've kind of tried to get over the past couple years, is a quarterly investment report. So I think something like that would be useful too, just to quarterly see what our bank balance is, basically just all of our investments, and see how that changes. I did notice somewhere there was a comparison. This is the first time actually I've been on council for 2 years. And this is the first time I've seen the results, basically, of our first budget that we passed 2 years ago that ended in July of 14. And it looked like we over-budgeted a little bit, underspent, but it basically was even. But somehow our net position went down by about 6 or 7 million. Does that sound right? And I was wondering if you could comment just on, is that capital projects that makes that happen?
So if you're looking at the net position number, so I think one thing just to be cognizant of the budget, this first set of statements with the net position takes into account is it on different basis. So basically, when you budget for capital outlay as an expenditure. On this report, it doesn't show up as that. There's some other items too related to your long-term debt, and basically there's different perspectives between the budget basis and what we're seeing on the first set of statements. The statements that begin on page 15 and then through to 18, that is probably more the accurate one to see. Now there's significant decreases there as well, I think. I don't know if that's in line individually with budget and what's driving that, but a lot of that has to do, I'm trying to remember what fund that specifically is driving that decrease here. But basically, so the net position one, it's not really an apples to apples comparison on that. Where you would see it as on these, page 18 would probably be your best, in terms of financial information, seeing all the governmental funds declining, and then those back schedules will show you the budgetary comparison on those. Let me see. If I go to, bear with me one moment to find the right page. If I can find it. So so if you look at page 18, you see that one column of non-major funds. Mm-hmm. If you go to page 80, starting at page 83 and 84. So the basic financial statements, basically we identify what we call major funds. Basically they're your largest funds. They get to be presented individually. And then there are, the rest of your governmental funds get consolidated into one column. And then in the back, starting on this page and some other information here, goes into all those individual funds. Now where that decrease was in the closure of the TIF 3 fund. And that was primarily transferring the money out of that fund into that post-TIF 3 escrow fund. And the reason where there was a decline, it actually ties to that restatement on the post-TIF, or the property tax escrow liability. In the past, there was really no fund balance in TIF 3 because you had this big liability offsetting your cash. Because we restated to say, no, there shouldn't have been a liability at the beginning of the year, you really were transferring a fairly sizable fund balance into this new fund after the closure of the TIF 3 fund. And then, basically, as things work out, because the TIF 3 funds closed, you still have a liability, it just didn't exist until this year. It's very complicated. Even we said this, as being auditors seeing it, it's hard to even explain it to some degree as to, maybe Elizabeth can do better.
I'm going to try because it is kind of crazy. But yeah, it has to do with the restatement at the beginning of the year. But also, you do have a liability with that money that came from TIF 3. It's just not the liability you thought it was. So it's not a liability tied to the property tax disputes. it's a liability because when the TIF ends, all that money that is not used for TIF purposes is payable back to the county to be distributed to the taxing district. So that is the liability you have.
So, just
hold on.
yeah, just to follow up on that a little bit. So I guess what I'm a little. So it sounds like this should be a one-time thing, but I also wonder sometimes when there's large capital projects that we take out a loan for, which doesn't happen often, but like for Windsor Road, I don't think that was actually this year. I mean, I think that will be the next year. Or $4 million. Oh, okay. So when that happens, does that affect the net position, or does that automatically, that would be construction in progress? Or how does that?
So when you take out the debt, you know, on your funds, and this is for a budgetary comparison, on the funds, you know, the money comes in, the proceeds comes in as this other financing sources and uses section down here. You would consider that in a budget or a budget amendment as you issue, depending on whether you're planning for it at the beginning of the year or not. Then as money is spent down on that, it'll show up in capital outlay. On those entity-wide financial statements, both the proceeds and the expenditures never hit your income statement, so they never really hit your. They just show up right on your balance sheet. So said as you incur costs on the project, it goes into construction in progress, and eventually into another asset category once finished. The debt you issue goes into a liability as a long-term liability, and then as that's paid off, then you are decreasing that with your cash payments on that.
Okay, I have Eric, then Aaron, then Diane.
So I just wanted to follow up on the TIF thing.
Yes.
In the future, would it make sense to carry the money that we would be obligated to return to the other taxing bodies at the closure of the TIF? Would it make sense to carry that each year as an obligation or a liability in the same way that you carry the pension? Your pension obligation is a liability.
Well, for the TIF, related to the post-TIF 3 liability that there is there, eventually, and again, this is more legal determinations than anything else, is to eventually a distribution will be made to the county, then to be paid back out. At that point, there is no liability left. And the liability only exists when the TIF is closed. So if you have another TIF fund coming down the road in the future to be closed and there's money left, the minute it's closed, that creates the liability. That's kind of the action that creates it. And then that liability will exist until the distribution is made to the county, who then will distribute it out to the city and any other taxing bodies, depending on that.
But just to follow up,
Yeah.
It seems to me that just as you don't have to pay money out of the pension fund until people retire, but it is an obligation that you have, that foreseeable obligation. Would it not make sense, just in terms of being able to see where we stand, to carry that in the same fashion on the annual reports?
That's a really good question. So a lot of it gets into accounting minutia, so if everybody's eyes roll to the back of their heads. So basically with the pension obligation, you're obligated for the services they've already provided, and the actuary makes an estimate about how that's spread out over the course of their retirement. And it's a long term. It's obviously you're paying this out over years and years and years to people. That's why it only goes on those entity-wide financial statements, not into your funds. This TIF liability is based upon a current action. So even though you can estimate kind of what you're going to owe eventually, there needs to be an action that takes place to create that obligation. With a pension, that obligation is created just by those individuals working and doing their job. So you think that obligation you see is all the work that's already been performed, not by any work that's going to be performed in the future. Whereas the TIF, any TIF liability related to that, any excess that you're going to eventually pay out, even if you know it's going to happen, that action that creates your obligation hasn't happened yet, and it can only be a liability when that action takes place. Does that make sense, that distinction?
Sure, it makes sense from an accounting point of view, but I would love to see. I think it would be really helpful to us to just maybe see a footnote or something in financial reports each year that would tell us that this is, coming down the road at some point.
I mean, there's things we can. Well, no, just for the TIF stuff.
In response to your question, the TIF is in existence to invest in that area of the city. So we don't know what we're going to owe the other governments until the TIF is finished. So that's why he says that triggers the debt to the other people, because we wouldn't know what the debt is. We don't know if we're going to spend the whole TIF or how much we're not going to spend and it's going to be left over.
Well, really, and maybe this is oversimplification, but you can assume that anything that's in the TIF that is not spent will ultimately be returned to the other taxing district. So maybe that's your answer. At any point in time, you look at the fund balance. If that money isn't spent on something else, that's what's getting returned.
Okay.
Aaron.
All right. How you doing, Mike?
How you doing?
So, I'm about as thoroughly confused as I could possibly be. And I don't know if, I'm lost at levy, so I'm still trying to catch up from levy and get a complete understanding of what that is. But honestly, just trying to understand the flow of this, the one thing that sticks out to me is this, just directly. Do we have $11 million to spend in the TIF that was left over? Yes or no? Just yes or no?
No.
No. Okay. Do we have any of that $11 million that we could spend?
There is no amount that you can spend right now. And there are certain legal things. I think there are certain exceptions that I don't know of. I think there are certain, if there's any obligation that the city has as of the closure of the TIF that hasn't been paid out, that you can spend. But it's something you've already been obligated for. So if you owe money for any purpose related to the TIF, that's the only money you can spend. Nothing new until the money is distributed to the county, or distributed to the county, and then whatever portion you get back, then you can use it for whatever purpose.
Okay. So,
Jim wants to help answer your question
okay.
here.
All right.
There are two pots of money that more or less relate to TIF 3. One is a small pot of money, one is a large pot of money. The large pot of money is now the subject of the President's lawsuit that was filed against the county. President's claims that they have a right to a refund of all of that money. So that's the subject of litigation. The other pot of money is the subject of a number of claims that private parties believe they have. They call it a final reimbursement for work done in connection with TIF 3. Their claims, for the most part, are highly speculative. But yet, until we figure out with them whether they're going to resolve those claims or litigate those claims, that money has to remain. Okay. And some of that money now is kind of mixed up with the President's lawsuit.
So I'm trying not to get bogged down in a lot of this. I just want to understand the basic premise of how are we able to withhold TIF money if it's not our money to withhold. So basically what I'm understanding from this aspect of the presentation as it relates to TIF and liability, that the $11 million was considered a liability, right? Mm-hmm. And was basically held off and not used just in case something happened in relationship to the hospital or something. I just want to make sure I'm following this. I don't know if I am.
In terms of how it was presented in the past, so maybe there's two pieces of it. The way it was presented in the past is, I think to some degree, kind of what you said. It was money held off with this thing out there, and really in that case, it should have been remained in terms of an accounting sense cash. There shouldn't have been any liability to say this money's not available. You didn't owe anybody anything at that time. So that's my understanding, at least from reviewing some of the prior work, is why there was a liability. It's basically because of that purpose. They're holding off on this and saying we could owe this, or they thought they owed it, even though it didn't meet the definition of it in an accounting sense.
Okay, so I'm going to back away from that at this particular point. I'm getting a feeling that that's a good idea. All right, so my other question is in relationship to funds. And Eric asked a question about us being able to see how the investments work or how they're doing for fire and police. Is that a typical practice for council members to have access to that type of information, or to be involved in what another fund is investing and how they're investing their money?
In terms of the second part to your question, there's not the council or board or whatever, the municipal governing agency doesn't often have control over how the pensions invest their money. The pension boards are usually the sole person responsible. In terms of seeing the financial information, I honestly don't know what is most common on that. I actually don't have an answer. I'm sorry.
Okay. And maybe I'm asking you questions that I could ask other people. I'm learning. I'm still learning from this. How to go. But since I'm paying you, I thought I would go ahead and do that. And my last question is in relationship to the proposed responses by management. You know, why wouldn't you all have some opinion or comment in relationship to what is being proposed as responses to your recommendations?
So I guess when we the way we work through this with Elizabeth is that, you know, we prepare those comments, right, the right comments, and then she responds to them. We don't assess we don't assess the level of response, because those responses take place after the audit that we're looking at. What you'll see is next year you'll have a similar letter, but with update. It basically changes. You know, as things are addressed, those comments will go away. You know, Elizabeth's comments will be updated. We'll identify changes that have been made, and part of ways that have comments that maybe have to continue to be presented but have been updated upon. So it's more of this year. We don't, you know, we're actually not allowed to give an opinion or give comments to management responses on this letter. Next year, we reassess as part of the audit for 15. We'll reassess all these controls and look at them again.
Okay,
So,
that's helpful.
is this a road plan then, essentially?
Yeah, and I will say, Mike and I had some extended conversations about the best way to follow up on some of those issues. So it's you know, it's not just, you know, something that we kind of dreamed up that we thought made sense. I think we're on the same page about what we need to do.
Okay, Diane?
I have two questions, and they're two separate topics. So the first is back to the monthly reporting, which a report to council is great. I'm curious also as to internally what monthly reports are available to, for example, department heads who are responsible for managing their department budgets. I mean, does someone now have an opportunity to say, well, I have this much money budgeted, I'm 2 months into the year, we've spent this much in all these categories? Is it easy for them now to get a monthly financial report to see where they are compared to where they should be in their budget or where they were last year?
There's some things that IT has done to try and help us take the data that we currently have and make it more useful. But I will say that I think ultimately the kind of oversight and ease of use that you're looking for is going to come with a new financial system. So the system we have is far from, you know, what you would see in a standardized commercially available system now. I mean, typically I would expect that a department head could have a customized dashboard, and they could define, you know, every time I open up my financial application, I want to see this pie chart, or I want to see this graph, or I want to see these pieces of information, just to make it really easy for them to you know, sort of stay on top of things, and that they would be able to easily create customized reports, charts, and graphs from their financial information. So, I mean, some of addressing that really comes from looking at new financial systems. You know, we could find something that would be a lot more friendly, I think.
Okay, thank you. Okay, my other question is back to TIF 3. As I understood it, the Supreme Court ruled in the case. The TIF 3 is closed. Deadlines for claims are passed. We're holding on to this money that really belongs to other taxing bodies, and it could be sent back to the county and then redistributed to the taxing bodies, and Urbana's share would be about 15% of that. So the question is, why isn't that done? Why are we still holding on if it's not a liability and it's not considered even a probable liability? What is preventing us from the distribution?
I'm going to defer to our
It's
city
more
attorney
legal
on
than
that.
accounting, but it's just
Jim?
it's such a big chunk of our report here.
I don't think it would be appropriate to address that at this point, we would have to go into closed session to discuss now pending litigation.
Okay. Okay.
That's why I backed off.
Any further questions? Michael?
So I've got a couple on the statement of net position. First is cash and investments. So, I'm sorry, page 12. So the statement of net position. And maybe offline sometime, one of you can explain to me. I haven't really figured it out yet, the difference between this and the balance sheet. I'm sure I'm missing something major. But anyway, on the statement of net position, we've got cash and investments totaling almost 42 million. I assume that in the snapshot of time on June 30, 2014, that's what was on hand. That's what was liquid.
Mm-hmm.
Well, I shouldn't say liquid. It was on hand.
Yes.
I guess my question about that is that, so that's just that is a number, how much of that was encumbered at that time?
I think in terms of encumbrance, I can't speak to that because in terms of the onsets, we don't really present encumbrances. But in terms of items that were owed, if you just go look at the liabilities, your accounts payable, was 3.8 million. Accrued salaries were about 1 million, a little over that.
Okay, so then you get
Those
down
items.
to that's my problem, and that's what I'm trying to work through, because then you commingle the assets, and then it's hard to see
Yeah.
what nets out that's not encumbered. That's why I was kind of asking that question.
I think, so when you say encumbered, you mean encumbered in an accounting sense, like we had an outstanding purchase order for a
Exactly.
contractual obligation on June 30th, but we hadn't paid the fund yet?
Yes.
Okay. I am not sure that I could answer that question because our current financial system does not handle encumbrances. The only
Okay.
way that we have to deal with encumbrances is to amend the next year's budget, but I never have a total or a figure in a balance sheet account that tells me what's encumbered.
Okay. Do you know, in fiscal year 2014, is there any way to know what our rolling average of available cash was?
When you say rolling average, you mean month to month? About how
Month to month
much?
average, sure.
Yeah, we could come up with that number.
Okay. I'd just be interested in seeing that. I'm wanting to see how's the city doing from a cash flow perspective above and beyond expenses. My other question on the net position is the unrestricted, the very last line. And what do those numbers mean?
So basically, for net position, there's certain definitions they want us to define in terms of presentation here. Unrestricted is basically anything that is not restricted by either state statute or outside entity like a grant agreement or something of those sorts, or it's not related to your capital assets or your debt that's was used to fund that capital assets all on the balance sheet. It's basically funds that are available for use at the council's discretion. Now, some of those have been committed or assigned to specific purposes already on the fund level, but for this statement in that position, it's not defined. All those assignments and commitments, basically anything that the council, either through budget or through ordinance or anything of that degree, doesn't get pulled. It gets pulled into this unrestricted. Everything that's restricted by an outside source or by by law is in the restricted category, if that makes sense.
So this would include things like our reserve for retained risk for liability and workers' comp claims, balances in capital improvement funds, things like that.
Okay. And is there any reserve for the potential exposure in the Carl lawsuit at this point in time? Any specific? I don't want to say an escrow. I say, are we reserving funds?
If you mean, is there a specific account code where we're setting aside money for that specific purpose? No.
So we're just considering in the So from what pot of money would that come if we were to not
Most likely
prevail?
from the fund balance in the general operating fund.
Okay. Okay, thank you.
Any further questions? Seeing none, thank you very much. And, oh, I did have, so we will see you again at this time next year, is that correct, or how does?
Hopefully a lot
No.
sooner next year.
Oh, a lot sooner, oh, right, yeah, what's the schedule going forward?
Not at this time. Our deal is we're going to shoot for December 31st, but end of January at the latest.
Okay, gotcha, okay, so we have a schedule, okay. And you're on contract for 5 years, is that how this? Okay, thank you. Is the artist still here? Okay, next up is approval of the minutes of May 11th, 2015. I will note that the time of recess in those minutes was 7 o'clock. It should have been 9 o'clock, I believe. That's on page, the bottom of one of those pages. It gives our time, yeah, at the bottom of page 3, it said we went in recess at 7:05. I think we went into, that was at 9:05. Is that correct, Diane? Yeah. Oh, okay. Well, let's finish this. Is there a motion on the minutes?
Motion to
moved.
approve.
Second.
Moved by Aaron, seconded by Dennis, or by Eric. Any further corrections? Seeing none, all those in favor?
Aye.
Opposed? Okay, minutes are approved, and we have one more staff report from Libby.
Kelly has asked me to remind you to fill out social service forms that Eric has distributed, and just thought I'd bring that forward since time is running short. So,
What's the due date? Yesterday?
yeah, I think it'll be folded into the budget, so sooner the better.
So we need to get our numbers to Eric as soon as possible. So this week you'd like them by Tuesday, by Wednesday, by Thursday?
Sure, or end of the week, and I can compile over the weekend.
Okay.
We actually didn't, when this issue first hit us, I was out of town.
Right. We
So,
never set a time.
So we didn't set a time, and we didn't set a dollar target, a total dollar target. I would suggest that we set a total dollar target equal to last year's total, and then we could prorate that based on what we finally decide for the budget, unless other people have, or, you know, I'm going to have to do some normalization. If people come in with different dollar amounts, I'll you know, total dollar amounts, bottom lines, I'll normalize to the same. So I'll normalize to fractions of the total. But it would make life easier if everybody agreed on the same total.
Yeah, I think Mike and I were working on a number. Laurel, did you?
Yeah, I thought we talked about keeping the same total as last year.
Yes.
And maybe subtracting out the 50,000 for the
Barnes and
for the Barnes Mobile Home and the
25.
12,000 for the Splash program.
Was it 12,000 or 25,000?
I think it was 20. Well, whatever, you know,
24.5.
those two things. Those were suggestions that we talked about when we talked to individual council members about how to pick a number. But the upper number should be what it was last year.
So, which I believe was 392,000. Is that
No,
am I-
290.
290.
I thought it was, well, I thought it was 200.
I'm sorry. It was just under 300,000.
Right,
It was
right.
290,
290, I think.
Yeah,
But
so
we could, if you just want to say whatever it was last year, that would be a good starting point, and then we can figure out if we want to subtract the 50 and the 25 or whatever it happens to be.
Yeah, I was going to work with the 225 number myself.
Okay, so you took off.
Yeah, I've taken off the two things and I'm working with 225.
So you took off 75,000.
Yeah.
Okay.
Okay, well, I will, okay, well, anyway, I'll come back with a normalized amount which gives everybody, you know, which adjust everything fractionally, the same fraction of the bottom line. If that's clear.
Okay, so people should have their recommendations to you by 5 o'clock on Friday?
By 9 a.m. Saturday.
9 a.m. Saturday. Okay, thank you. Okay, any further staff reports? Okay, next up is public input. We have one card in front of me. Bishop King James and Reverend Dr. Evelyn Underwood do not wish to speak, but ask that our concern about the Dr. Ellis subdivision sewer problems be recognized. Next up is ordinance number 2015-549, an ordinance amending Urbana City Code, Chapter 22, Sections 2231, Sections 2245.1 and 22-61. That's the local motor fuel tax, municipal gas use tax, and hotel motel use tax, respectively. Elizabeth.
I think we went through the rundown on this a couple of weeks ago, so I'm not sure that I need to do that again unless you would like me to, but I'm happy to answer questions.
Diane.
I don't have a question. I'd move to divide the questions so that we vote on these increases separately.
Well, I'll second that. But I guess aren't they already divided? Don't you have two separate
Well, no,
ordinances?
this separates, we have one that the food and beverage is already separated. This
Oh.
would separate the three, the local motor fuel tax, municipal gas use tax, and hotel motel use tax into three separate pieces. It's been moved. Did you second that?
I won't second it because I'm agnostic on that.
Oh. It's been moved. Is there a second?
I'll second it for the purpose of debate.
Jim, is it debatable? A division?
Not the motion to divide, but the underlying substantive matter, assuming the motion were to pass, would be debatable, but not the motion to divide.
Okay. So all those in favor of dividing this up into three pieces?
Aye.
Aye.
Opposed?
Well, no, but I'm not
The
strongly
motion
no, but
passes. It's divided. Okay, so first up is the local motor fuel tax. And that is proposed to go up 1 cent. Is that correct, Elizabeth?
Right, 1 cent per gallon.
Right. Okay.
I'll make a motion to adopt a 1 cent per gallon raise for the motor fuel tax for the coming fiscal year.
second.
It's been moved by Dennis, second, and this is to send this to council with a recommendation for approval. Is that
That would be
correct?
true.
Moved by Dennis, seconded by Eric. Any further discussion? Diane?
Well, I would just clarify that this would maintain the current level of funding for the local motor fuel tax purposes. Otherwise, we'd be losing funding for capital improvements.
Okay. All those in favor of sending this to council?
Aye.
Aye.
Opposed? Motion carries. Part 1. Okay, municipal gas use tax. This, could somebody specifically, Elizabeth, this is specifically on large special users?
Right. This applies to natural gas users who are not subject to the utility tax. So this is really large customers who purchase their natural gas wholesale across state lines. We don't, this is collected by Ameren because they actually deliver the natural gas to those locations, but they provide us a monthly payment. We don't receive any detail of exactly who those customers are, but it's a safe bet that they're, large commercial, industrial type customers.
Okay, is there a motion? Bill?
I have a question. Do you want a motion first?
No, go ahead.
So do you know if, I think it's true that educational institutions and nonprofits are exempted from this? Is that,
No, I don't think that's correct.
so the school district would have to pay?
Yes, and yes, it would. The school district, I do know that it affects them, and I think they told me the impact would be about $6,000 or $7,000 a year.
And then, do you know if there's a statutory limit on how high that can be?
I looked into that, but I don't recall at the moment, but we're definitely, 5 cents is definitely acceptable.
Okay, because I think cost per therm wholesale is about 45 cents, so this is a little more than a 10% tax at current cost of wholesale.
Okay, is there a motion?
I move adoption of the natural gas use tax.
Second.
Moved by Eric, seconded by Aaron to send this to council with a recommendation for approval, I assume?
I'm sorry, to move to council with a recommendation for approval.
Okay. Michael?
So would this also affect the university?
No.
Okay, but the school district would be affected?
Yes, but other than that, I don't know any specifics.
Okay, and there are about 12, about a dozen utility customers, so that'd be an average of, or a mean of 12,000 for whoever the middle entity is, probably.
Yeah.
An average $12,000 increase. And I'd also just note that it's almost a 43% increase in this tax. To add to Bill's comments about actually being about a 10% tax on the actual cost of the gas.
Any further, Mayor?
But they're not paying the other tax, right?
Right, the use tax applies only to customers who do not pay the utility tax.
So they're missing out on paying the local tax that everybody else pays, so this is a separate tax for this group.
Right, I mean, I think the original intent when this was put into place, in fact, was to basically recover some revenue from those customers who were sort of escaping payment of the utility tax.
Thank you.
Further questions, discussion? Seeing none, all those in favor?
Aye.
Opposed? Motion carries. Next up is the hotel motel use tax, which would go up, I don't have the numbers in front of me, it goes up 1 cent.
1%.
1%.
Yes.
Is there a motion? Diane?
I would move this with an amendment. Can I do that?
Yes.
I would amend this to designate $10,000 of the revenue generated by this tax to fund Visit Champaign County, which was formerly known as the Champaign County Convention and Visitors Bureau. Total revenue from the hotel motel tax is expected to be about $1.2 million if this passes. So the $10,000 contribution to Visit Champaign County would total less than 1% of the revenue. The rest of the revenue goes to the general fund. I think rejoining Visit Champaign County would help at least partially offset the disparity in the tax rates that are now going to be between Champaign and Urbana. Champaign's still at 5%, Urbana would be at 7%. Visit Champaign County could help provide hotel sales leads and marketing, and I think this is particularly important when you're looking at groups and visitors in the 50 to 100 room range. Visit Champaign County provides sales leads for people looking to reserve that number of room, and currently they aren't referring Urbana hotels because we do not participate or support the organization. The promotion by Visit Champaign County can also help promote or support food and beverage purchases, which will generate revenue for the city. I think most importantly, the city of Urbana at this funding level would regain a seat at the table, which I think is very important. We haven't been there for several years, and I think it's very important for us to be collaborating with other communities in the county on tourism and event promotion. We'd also join the Urbana Park District, which has started contributing $2,500 a year toward Visit Champaign County. So basically, this very small, less than 1% of the hotel motel tax going to support Visit Champaign County would really signal our city's renewed commitment to collaboration on tourism and marketing, and I think it would help boost hotel motel occupancy and get us working together again. So my motion is to pass this with the amendment saying that we would designate $10,000 annually to visit Champaign County.
Was there a second?
That was a long amendment, but I'll second it for purposes of discussion.
Okay. And I have a question, Dan.
Yes.
I know that we have performance standards for UBA, looking at them for EDC. How do we incorporate performance standards into this?
Well, I think we need to have a conversation with Jane DeLuce and discuss what we'd like to see out of this partnership and where we'd like efforts
Is there an
to
actual contract generated then?
I don't know. There could be. I suppose there could be an agreement of some sort.
Okay, I guess
I don't know.
would-
I think that's worth exploring.
Yeah, I would appreciate having something like that in the motion, but Mayor?
Okay, we've been told that if we raise our hotel motel tax, we need to pay to overcome the disparity in the tax rate. I don't think that's true, because when we raised it from 5% to 6%, we became higher than Champaign. And we looked at the effect a year later, and the revenues of Urbana hotels grew 18%. The revenues of Champaign hotels grew 9%. So we did twice as good as Champaign when we had a higher tax. So I think that that is a false claim that somehow we have to overcome the disparity, because people do not choose the hotel based on the tax. They choose the hotel based on the location and the price of the room. And I would ask the question, of this marketing effort, how much is paid for by the hotels? Do the hotels contribute anything to this effort?
Are you asking me?
Yeah, I'm asking.
I don't know.
Well, I think that's a question that we should be asking the Convention and Visitors Bureau, because this is the industry that they say that they're helping, but I'm under the impression that all the money comes from the governments instead of the business itself, which I don't think, if the hotels don't find it valuable enough to contribute, I don't see why the city should be asked to contribute. So that is my concern. And I would also like to ask the Visit Champaign County how much they spent on the effort to get the basketball tournament back here, because that was a huge effort and it didn't go anywhere, and yet there was a lot of bullying going on, and I will call it bullying because I sent a letter encouraging the basketball conference to come back here, and then we got asked to contribute money, and I had the director of the Athletic Association coming and asking for money from Urbana, and I asked if the Athletic Association at the university could contribute, because Urbana was really in tough financial shape, and he said that the Athletic Association didn't have money for that. So over the years, I felt that we had contributed over $1 million to this organization, and we had very little to show for it. I know that people are emotionally committed to this, and so my suggestion would be that we could contribute up to $5,000, which was the compromise that we did on the basketball, and that we would do it to match what the hotels contribute, or that we could do it based on their actual performance if we have some measures developed. So rather than just handing out the money on the, I think, false assumption that we have to overcome some kind of disparity in the tax rate, I think we should do this based on their actual performance and how much they actually help the economy of Urbana in some measurable way.
Okay, a lot of hands went up. Let's do Diane, then Dennis, then Eric.
Part of the rebound in the hotel occupancy rates that you referred to were coming out of the recession. So going forward, I don't know whether we'll continue to see the same strong performance that we saw that you're alluding to. I also think the hotels pay in the form of hotel motel tax, and that's what funds the state tourism efforts. So, and that part of that comes back to the individual convention and visitor bureaus in the form of matching funds. So they do fund that. And a $5,000 contribution is something, but a $10,000 contribution would put Urbana back on the board with a seat at the table, and our own marketing person could be directly involved and work very closely. And I think for a city our size, that's a reasonable contribution.
Dennis?
Yeah, I see this in both ways. I appreciate the mayor's need to have accountability for the use of the money and participation from businesses as well as just the city. On the other hand, in terms of the entire budget, a $10,000 contribution, if we were able to sit at the table and make influence the decisions and also maybe the focus of how Urbana is marketed in the county and beyond the county, that's pretty important. We've relied upon the UBA to provide a lot of those kinds of services to us, but you can't beat having county-wide attention at, with a different level of participation, which I think is going to be important for us in the future to be reconnecting to the larger community in a lot of our goals. And $10,000, if that's the largest amount that we designate for arts grants, according to the recent report that we just got from the Arts Commissioner, then I would think that for the purpose of the business of Urbana, we could afford the same amount here. So I'll support this.
Eric?
I will support the motion as amended. Historically, I recall that I guess everybody who voted to cut off funding was the decisive vote, because as I recall, it was 4-3. And I was one of those people, and I was one of those people based on my assessment at that time of their performance. But I think that they have tremendously improved the work that they do. I think the quality is significantly better, and I think that and when I did vote against the funding at the time that it was discontinued, I realized at the time that this was, that the downside of that was not being part of a larger cooperative community effort. But at that time, I felt that the effort that was being supported needed a wake-up call, that the quality was very, very bad, and actually they had input from a number of people and really hadn't responded effectively. But I think that they have really got their act together, and I'd like to see us be part of supporting them again.
Eric, would you please take the chair and recognize me?
I will take the chair, and I will recognize Alderman Smythe.
Okay, I'll support this as well, but given that I think that we can get our $10,000 back essentially from participating, and so I think it'll be a wash. But my condition would be that we develop some performance standards much along the same lines as are being done with, or have been done with UBA and are being done with EDC, and would ask that you accept a friendly amendment to that effect, that some performance standards will be incorporated into the contract and contribution.
Yes.
Okay. Is that acceptable to the second?
Yes.
Okay. I'll take the chair back then. Aaron?
When would the performance standards be implemented? Because you're tying this to this tax at this particular point. So if we vote yes to move it forward, are we voting yes without the performance standards?
We're putting it into the budget as a $10,000 line item, and we'll develop a contract of some kind in the next couple months as part of that budgeting process. moving forward. I assume we're going to be seeing the same thing with EDC.
But I'm saying that, so you can put the line item in there, but you don't have to give the money until you actually have the contract drawn, basically? Is that what you're saying?
That's how we do our social service funding and stuff like that. They have to prove that they've performed, and then we write them a check.
Okay. And so by the time we vote on this, though, so you're saying that we could actually vote on it through council at the full council meeting, and although it's a line item there, we still don't have to do it until we all agree on the performance measures, because
Yeah.
I think there has to be some agreement on the performance
Yeah,
measures,
it would
right?
go, right, exactly. It has to go into the next, it'll go in as a line item into the budget, and we have to develop a contract of some kind, much like we have a contract with UBA. That's my vision of it. Bill?
I think maybe Elizabeth is a little worried about how to write the ordinance, but if you can figure it out, how to put the $10,000 condition in there.
Yeah, I'm sure we can come up with something, and if it doesn't work, it can be revised.
Okay. Yeah, I would support this. I think Champaign-Urbana-Champaign is stronger as a brand together, and I think that we've been left out of that branding opportunity for a few years. $10,000 seems like a relatively minimal amount compared to their budget, and you can argue their budget is too big, and I would probably argue that. But I think that it's important to be part of the image, the brand that Champaign-Urbana-Champaign represents. So I think that by getting back into the CVB, I think that's a first step in trying to re-achieve that brand. Because you talk to the students, and most of them still think of Champaign-Urbana or Urbana-Champaign as one place. And most of them realize there's different city councils, and I hope it stays that way. But you know, when they come to sporting events, they'll say Champaign or whatever. But CVB's missing out of a lot of opportunities too by not being able to market some of the things we do really well, like the downtown market and our parks. But now they can market our parks, and at least they are able to do the university things because the university is part of the CVB, so they can do the Arboretum and Cranert and things like that are in Urbana. But you know, I think we have a lot going that we can contribute to the brand, and I hope that that's kind of the direction that this is going. So yeah, I would support the text with that amendment.
Further discussion? All those in favor?
Aye.
Aye.
Opposed? Okay, motion carries. Okay, next up is ordinance 2015-550, an ordinance amending Urbana City Code, Chapter 22, Section 2291, tax on purchase of prepared food and certain alcoholic liquor. Michael?
Upon advice of council, out of an abundance of caution on this one, I think, I'm told the state law precludes me from participating, so I shall recuse myself.
Okay, you get to hit the bathroom. Okay, this is an increase of 1%, I believe. Is that?
It
yeah, or
would be an increase of 0.5% in the food and beverage tax. So we go from 0.5% to 1 full percent.
Yes. Mike, did you have anything else to add? Or you showed me a report earlier today.
I've got copies of that chart that just shows where we compare to other central Illinois cities. I'll just offhand know Decatur's at 11%. We would be at 10%. Peoria is at 10.25%. Bloomington, Normal, and Danville all are at 9.75%. So we would not be out of range with this overall rate of sales and food and beverage tax if this is approved.
Just to clarify, those numbers are including all of the state and local sales tax that this is tacked on to. So.
Right. Yeah. Is there a motion?
I'll make a motion that we do this and send it to the council with approval.
Second.
It's been moved by Dennis, seconded by Diane. Any further discussion? All those in favor?
Aye. Aye.
Opposed?
No.
Okay. Motion carries. The last item on tonight's agenda is the presentation of the capital improvement plan, which will be followed by a resolution. All engineering staff is here in abundance. The Bill, Brad, and Craig Show.
Yes. Yes, a very dapper bunch.
Well, good evening. Yes, you all, I think, know Craig and Brad and myself, Bill Gray. We're here to talk to you about the 2015 Capital Improvement Plan, and I thought it'd be appropriate to start off with some of the recent successes that we've had over the past year and go through a few of those projects and just kind of recap what's occurred. It's been a very busy year. Let's see, page down there. So we know a lot about what's occurred in and around the Boneyard area, and Ray Street was a big component to that. And this past year, we completed the Ray Street project construction. The Griggs to Park was about a $2 million effort, and that was funded with TIF 2 money. The Boneyard project, which we had a ribbon cutting and then a Arts Festival component back in April, was showcased in its splendor, if you will. Now, that was a $6 million project. We still have a few odds and ends punch list items that are going on, including a little bit of a leveling of the pavements right at the bridge where you have a bump currently, as an example. But all in all, it's, we think, a very successful project. And from what we are hearing with the community development ED folks, there appears to be a lot of interest in buildings, facilities adjacent to for development. So that's a good sign that people want to be there, and whether it's work or play or eating or what have you. So I think hopefully a year from now we can report on some progress with the properties in and around that area. Broadway, of course, was a big component too. This is looking north at Water Street. We may have to rename Broadway someday to Narrowway perhaps, but we narrowed it up and we enlarged the parkways, and it's very nicely landscaped now. And our arbor crews, if you've seen downtown Maine and Race and Broadway, are very excited about the work that's going on in beautifying our city. Airport Road was a very important project. We had a little bit of a hill in the lower left that was a visibility concern for folks that were in the Landis, Somerset subdivision area. We have lowered it by 2 to 3 feet. We've rebuilt the roadway, and it's a nice new roadway, safe roadway, and that work was completed last year. We had state motor fuel tax money fund that, along with a little bit of it was TIF 4 money. A portion at the west end was TIF fund in the TIF district. These were 4 short segments of streets, but the important part is they needed to be reconstructed. The one shown here is a piece of Country Club Road near the golf course or by Cunningham Children's Home, and it was a reconstruction of the street, and then we had hot mix asphalt overlay done, and again, this was state motor fuel tax funded, and it was completed last year. Goodwood Avenue and Green Street, and this was again a federally funded project. We were able to put all new traffic signals in, new street lighting in. We have a pedestrian scramble at this intersection, and we also milled and resurfaced a portion of this intersection to make it better for travel. We did a lot of resurfacing work last year, $1.8 million worth. Again, state and local motor fuel tax funded it. This is a picture in front of the library area on Race Street, but the listing of the streets are on the lower left. Again, this work was done last year. Ash Street, although it was a short segment of a 2-block stretch north of University Avenue, the Park District partnered with us on a 50-50 basis. This is a main roadway into their daily and heavily traveled facility where they do a lot of storage and equipment parking. Florida and Philo, in fact, today we had a nice compliment from the apartment manager of the Florida Apartments to this signalized intersection. We have now included bike lanes at this intersection. We now have the appropriate number of signal heads, and we've also upgraded to audible pedestrian signals there. We've shortened the distance for pedestrians to cross. So it's a safer intersection, a more user-friendly intersection, and it accommodates all modes of transportation very well. Olympian Drive, yes, that is a picture of paving. The west half was paved recently, and that's between Apollo up to the bridge itself. We're the contractor is actively building the bridge piers and abutments. The lower left picture is an aerial shot of showing the pavement in place and also up to the bridge that will go over the tracks. The contractor is working very hard and moving dirt from an east borrow pit to build up the pad on the east side. And the drainage improvements are installed on the east side. So there may be steel delivered, steel girders, beams installed this summer, we think, July-ish, maybe August. And then the actual bridge work will happen. So the contractor is working hard. He'd like to try to finish the majority of the work this fall. We'll see if that plays out. Again, rain is always a wild card in these sorts of projects. It's important to note that there is not one penny of local dollars paying for this $12 million project. It's all state and federal money. High Cross Road, again, there is not one penny of local dollars being spent for this project. This is a aerial shot. We're right now in the final stages of the surface work going on between US 150, University Avenue, if you will, to about a mile south of where the Florida Avenue Extended is. It's to accommodate future development. Hopefully that will occur in the months and years ahead, triggered by Menard and other developments, but we will be able to accommodate all the necessary turn lanes and travel lanes necessary for increased traffic in this area. Windsor Road. It's been under construction, started last year. We hope to wrap it up this Labor Day-ish or so, maybe final restoration in the fall. We ran into a little bit of a snag recently with we uncovered a bad Urbana-Champaign Sanitary District interceptor pipe that was made of cement materials. If there's any advice engineers can give you is don't build sanitary sewers with cement pipe. Hydrogen sulfide gases eat away at it, and we found this out. And fortunately, we had to stop the progress of the project. Sanitary district and their contractor stepped in and lined the sewer. We had to do a point repair. So right where a force main empties into a gravity sewer at the intersection of Philo and Windsor, it flows by gravity to the plant. There had to be a long stretch of sewer that was lined, and that work was recently completed, correct? So the contractor is now able to backfill and finish up his work at the intersection, the north leg of Philo.
Bill, how extensive is that cement section then?
I know the work went from Philo Road to about Boulder. I'm not sure if there'll be future work to the east or not. I don't know if the pipe changes material or not. But we do know that that stretch between Philo and Boulder Drive had to be upgraded with a lining.
Mayor?
Okay. Oh.
How long does the lining last?
You know, right now, I think we can say safely 50 years, but it may be even longer than that. Lining's been in place in Europe, 50s and 60s. It's been in the U.S. pretty much in the 70s. Brad, I don't know, or you know any other information, but lining is a very good method for ensuring the capacity and integrity of a lining pipe. So
Is the use of the cement, was that not known when they installed that cement pipe?
Can't answer that. I know many years ago, about 15 years ago, we uncovered some cement sanitary sewer in Cunningham Avenue, which was our sewer, and we had to line it. And that went fine. We would hate to have dug up Cunningham Avenue to put a new pipe in. So It's a great in situ type technology that we use, and it beats the alternative, which is open cut. So,
Thank you very much.
okay, so future projects.
I just had a question for you,
oh,
Bill. As far as the lining, is that something that we did at the city, or did we have to, was that an extra cost, or what? How did we handle that?
Sanitary and storm sewer lining is usually bid out. There's about a half dozen contractors that bid on that. Brad's and his shop does all the contracting for that, and every year we have lining contracts. In fact, he's going to talk about that in a few minutes.
Okay.
Oh, I'm sorry. Was your question, was there a cost to Windsor Road?
Yeah, was
project? No.
Okay.
No, that was a sanitary district, 100% cost.
Okay.
Okay, so what projects are in the hopper, if you will, to occur in the next 12 or so months? Well, certainly the Lincoln Avenue design is well underway, and we're getting updates and have meetings with this project, and we're reviewing the 30% complete plans right now. And hopefully we'll get serious with right-of-way discussions, acquisition discussions, and work on completing the project so we could hopefully start this project next spring. Again, this is Lincoln Avenue from where it currently ends at Saline Court, 1 mile north to Olympian Drive. The yellow line is a representation of where Olympian Drive is going to be.
Bill, on this particular project, did you get word back from the state on IDOT on the shoulders?
Oh yes, I'm sorry. There will be shoulders on both sides of the roadway, and that will be for pedestrian and bicycle use. Yes, that's been approved. Again, we just talked about it a minute ago, and Brad will talk a little bit later, but every year we do have lining and point repair and extension type projects. And these are approximations of about whether it be the sanitary sewer benefit tax or the stormwater utility fee. This is the amount of monies that are typically involved with these sorts of repairs, and we uncover them all the time. The bike master plan update, actually a quick update, we did receive a draft that staff is reviewing. We met with the author of the master plan, which is the Regional Plan Commission, and we hope to get the update here in the weeks ahead, and at some point we'll then be taking it for public comments, and that will go through a variety of ways. The Bicycle and Pedestrian Advisory Commission will look at it, the Sustainability Advisory Commission will look at it, the Plan Commission will look at it. We hope to have it adopted by the City Council to be incorporated in the comprehensive plan. It's a very comprehensive document. They do incorporate many of the comments that we received when the League of American Bicyclists awarded us the gold level for bicycle-friendly community. And although that occurred last fall and they had almost finished up the bike master plan update, they paused and decided to address some of those comments. Hence the lateness, if you will, of this update. But it's a very good plan, and we're anxious for all of you to look at it and comment on it. So again, a couple of quick statistics on miles of streets, and if you look back 5-7 years ago, you know, the miles of on-street bicycle facilities was 0. You know, so we've done a lot of work in making this a bike-friendly community. Pavement preservation, Craig will talk about this a little more, but this is really a key component to keeping our streets in usable, good condition. Here's an example of what we did on Main Street recently as an additive to really keep the asphalt pavements in good and pliable condition. Brad has this project going out for bid here in the next month or two. This is for sidewalks on Cunningham Avenue. At the south end is Country Club Road, Perkins Road. At the north end is Anthony Drive, and this is an unsidewalked area, and it is used a lot by pedestrians because there's even there's evidence of like a cow path, if you will, on both sides of the street. So we'll have a wide sidewalk on the east side and a 8-foot sidewalk and a 5-foot sidewalk on the west side. Oh, and that's being funded with TIF 4 monies. Concrete patching, Craig is finalizing this project to be going out to bids. Bradley and Florida are the primary streets for work, and these are just examples of some patching that needs to be done on, you know, arterial streets like these two streets. Broadway Avenue, you've already been fully briefed on. We're poised to go out for bids on this project and reconstruct it in concrete pavement. And you'll be, a week from now, receiving an intergovernmental agreement with the Park District where they will pay 100% of the cost to put a wide sidewalk on the west side of this stretch of pavement as a kind of a phase one of a loop path system around the Crystal Lake Park. Willow Road, the consultant is working hard to do the design. I may have briefed you, or some of you, that we had a little bit of a setback in the environmental assessment and make sure that we have no adverse impacts to the soil conditions on this roadway. And we're now looking at 2016 construction. Because some of this involves the US 45 roadway, their time frame to do their assessment takes many more months than us, and that's just the way IDOT handle these matters. So what we thought would have been 2015 start is now realistically a 2016 start. But we plan to move forward. We have an economic development program grant of around $1.3 million, and then TIF 4 money is paying this, and we received a truck access road program grant, a modest $80,000 to help with this project cost, funding the project. MCOR, you're going to hear more about this. There'll be a formal presentation to council probably in late August, early September. I did talk about MCOR at our developer roundtable lunch, and basically this impacts 2 projects. That it's actually 5 total projects. 2 are in Urbana. Urbana's share is $2.1 million. The total MCOR 5 projects is $35 million. 15 of it is in federal dollars, and I'm rounding the numbers off just to make it easy for you to remember. But the Green Street project between Wright and Busey will be starting a year from now, or a little over a year from now. We hope to take bids in June, award it maybe August timeframe construction, and we'll be doing a road diet on this Green Street. What I mean by that is the 5 lanes will become 3 lanes. We will have bike lanes, we will have wider parkways, we'll have trees in the parkways, and we'll be better making it safer for the pedestrians. We'll try to get the bikes off the sidewalks where they are now, and we'll have a very safe wide bike lane that will be slightly elevated in this stretch. And let me show you what's going on by, oops, I guess I don't have that. Well, there's some Union, at the Union, there's some interesting things that we're doing for bus loading and unloading. Again, that will help make things safer for pedestrians and bicyclists and transit users. More details are coming, but I just want to let you know that this project is taking a lot of Craig's and my time in the coordination with MTD. I mean, it's good coordination, good work, but it's a lot of effort involved with MTD, the university, and the City of Champaign. City of Champaign is the lead agency for the federal funding and with the agreements with the Federal Highway Administration. Project 5, again, Busey the Race. There's a picture at Race kind of looking west. We were able to capture a bicyclist in the photo here too, just coincidentally, I guess. But this will be the starting point, and we'll be rebuilding Green Street. And again, it will have bike lanes. We'll be coming to you soon to talk about removing parking. Craig and I have started the discussion with removing parking on the street and getting some of the feedback from property owners along the stretch. I'm going to stop and turn it over to Brad, and Brad's going to fill you in more.
Thank you, Bill. What I'll talk about this evening is a little bit about the background of the capital improvement plan. The first bulleted item, the planning document for infrastructure. This is a really important document for us. It ensures that we adequately budget funds and prioritize our projects based on the limited dollars we have available. It helps us as far as our staffing assignments, so we know what projects are coming up to make sure that we have enough engineers and technicians to cover the design and construction of the projects. And it also helps us with identifying areas to do televising, of the sewers before we do road improvement projects. It ties in with the bike infrastructure. If we know we're going to be doing a resurfacing project on a particular street that's designated for bike lanes, we can incorporate that into the project. And it also helps us when we have to make sidewalk improvements to bring the wraps up to ADA compliance when we have reconstruction or resurfacing projects. So we use this document a lot on a daily basis, and it is real important to the engineering division. The second bold item, the research started back in the 1980s. They actually took 6 years of identifying the city's infrastructure needs, and in 1986 presented the reports to council. As part of that effort, they actually led to the adoption of the sewer benefit tax, an allocation of a portion of the city sales tax to the capital replacement and improvement fund, and the adoption of the capital improvement plan ordinance, which is 8788R-14. And as part of that ordinance, and the reason that we're here tonight is that annual update. So we've continued that tradition since 1988. And just to point out, the document before you covers a 5-year planning period. He's starting in the fiscal year 15-16, running all the way through fiscal year 19-20. And to cover what budgets are covered under the plan, and to point out these include both revenues and expenses. These are basically cash flow projections in 2015 dollars, but the sanitary sewer benefit tax funds are covered under that, the stormwater utility fund, the state motor fuel tax fund, local motor fuel tax fund, and capital replacement and improvement fund. And then we have some other funds that we don't actually carry the budget for, but we do report any capital improvement projects as part of that, as part of the capital improvement plan. So for example, all the TIF districts, TIF District 1, 2, and 4, which are currently active, we report major projects. And if you'll notice in this year's report, the only ones that it's really reported for is TIF number 4. We also report on some of the community development block grant projects that are funded through that infrastructure projects. And finally, the motor vehicle parking system. Obviously, that gets into the parking lot resurfacing and the parking deck as part of that. Important to point out, these are just infrastructure projects that are reported in the CIP, not all the operating expenses and revenues for those particular items. And then going into the sanitary sewer utility fund, point out this is funded by the sanitary sewer benefit tax. We're projecting for the fiscal year 15-16 to take in about $3.7 million in revenue. We've got about $1.294 million in expenses anticipated. Out of that, as Bill mentioned earlier, we have $400,000 for the rehab and repair, and that's primarily what we pay the sewer lining and the point repairs out of. We also have $745,000 for maintenance that gets into the sewer cleaning and televising, as well as having the staff be able to go out and identify problems and do the projects to repair those sewers. As part of that funding, we also have been setting aside $100,000 a year for future interceptor projects. These would be for unsewered areas of Urbana as the city develops out, and we're projecting that by fiscal year 19-20 that there will be $900,000 reserved for future interceptor projects as part of that effort. And then on the stormwater utility fee fund, we're projecting $1.4 million in revenues. Some of the major expense items in that one are the storm sewer cleaning and televising project, which is coming up at $200,000. We're looking at doing quarter sections this year as part of that program. That would involve Bradley, Broadway, Fairview, Lincoln. If you can kind of think of that as a square quarter section of area that we'll be doing cleaning and televising of the storm sewers in, and then also hopefully Fairview, Lincoln, Springfield, and Wright. So we're kind of starting in the northwest quadrant of the city and working our way southeast with our intention of televising all the storm sewers in the city. And then we've got $350,000 budgeted in rehab activities for the storm sewer system this year. The monies also pay for our MS4 program, which is an annual compliance program we have to do to improve water quality in the city. It pays for incentives like the Rain Barrel program, which we gave out 287 Rain Barrel incentives last year. We had a successful Rain Barrel program again this year. A couple of weeks ago, there were a lot of people that came in to get rebates for that. It also pays for our mosquito abatement and some of our bridge repair costs as well. At this point, I'll turn it over to Craig to talk about some of the transportation programs.
Thank you. I've decided I don't wear a tie that often, and I don't like it. So.
I never wear a tie.
So bear with me. With the state motor fuel tax, we receive approximately $1 million annually. I looked up the revenue over the last 5 years, and we've pretty much flatlined at about $1 million the last 5 years. To give you an example, too, over 10 years ago, we got about another 60,000. So we've pretty much roughly about $1 million annually is what we receive. We do get some special allotments. We're in the last year of the Illinois Jobs Now allotment, which is about 176,000. This will be the last year that we will receive that allotment. We also get, we're one of the few high growth communities in the state of Illinois. We get about 30,000 annually, and that'll be up through the end of fiscal years 18-19. What we use the state motor fuel tax money for is basically to reconstruct or resurface our primary roads. So they're mainly our arterial collector type roads, like a Lincoln Avenue is an example of the type of road that we use our state motor fuel tax money for. We also use them for traffic signal upgrades and for bridges. Local motor fuel tax funds, since passing of the fund there in 2010, we get about a little over $700,000 annually. With the 1 cent gas increase, that's about another $180,000 of increase in fee there. Of course, we'll note that that is also there's a decrease in the general revenue line item accordingly. So it's basically a net zero increase for us with the road, with respect to the road fund. What we use local motor fuel tax money for is resurfacing and reconstructing all of our roads. We will pair that with the state motor fuel if we have a bigger project we needed to get done, but we mainly try to use it for more of our collector to our residential street program. With that, we also do pavement preservation and patching projects. As noted, Bill showed earlier on Main, we do an annual surface seal project, so I just wanted to inform council about this, that since 2011, when we resurface a street the next year following, we will basically reseal it. And that adds extended life. We're projecting at least another 5 to 7 years of basically life to that. What we're trying to do is get ahead of the curve. There's a big bell of fair streets that are heading our way, so we're just trying to keep the good roads good. The other thing that we're doing with the local motor fuel tax is we're paying the annual debt service on the Windsor Road project. We're making the second allotment of 10 allotments this year. The Capital Replacement and Improvement Fund, of course, that's funded with a transfer from the general fund. Last year it was about $858,000. Now we're down to $678,000, some odd change. What we use that for is primarily funding our bike infrastructure, our brick concrete sidewalk repair and replacement projects. We do limited pavement preservation and patching projects, some street lighting projects, and we also do, there's a community development home transfer and capital improvement supplementary program that is funded through this. Of note, the Broadway Avenue project this year is our last project that will be funded in the next 5 years with this particular fund. From here on out, it's all basically pavement preservation or pavement patching. I'll turn it back over to Bill for challenges.
One thing I wanted to stress with you all is just, the challenges that we have. and this isn't necessarily new news, but with our aging infrastructure and declining motor fuel taxes, and actually I've been here long enough to know that even in 1990 we received about $1 million from state motor fuel taxes. So it truly has been a flat revenue source for not only Urbana but all cities. With respect to your population, even though our population has increased from 20 years ago, with that increase, the price, the allocation per person has steadily declined. So really haven't made much headway with state motor fuel taxes. Rising construction costs, they are occurring, a lot of it is tied to fuel costs. Right now it's been helpful that fuel costs, if you will, are a little bit lower, but there's also other factors that we try to take into consideration, and that is it a good time of season to be bidding projects? For example, right now, I'm glad we don't have our $1.8 million resurfacing project because the IDOT, the state, has let all kinds of road resurfacing projects this year. And in a way, it makes contractors mad because if you would, at least for Champaign County or District 5, make those dollars available on a more consistent level rather than peaks and valleys, it just makes it easy for contractors, for employees that you have to staff, lay them off when you don't have a lot of work and you got to find people. But just to give you an idea, IDOT is involved with the US 150 here to St. Joe, the US 150 from Champaign to Mahomet, 130 south to Philo Road from really where our project stops, Florida Avenue Extended. North Illinois 47, there's Interstate 74 work. They took bids. The prices were too high between here and Mahomet, so they have to rebid it. So it's just millions of dollars of work, and it's all right now. It's just a shame that it can't be spread out more. But we try to pay attention to that so that we, in our bigger projects, bid it in a time when maybe IDOT doesn't have so much on their lettings. Regulations increase, and probably the classic example, although it's very, very important regulation, it's changed 3 times over the last 15 years, and that is ADA standards for ramps. You know, when you're trying to meet a standard 15 years ago and you want all the intersections to meet that standard, but it changes and it changes again, well, what we did 15 years ago technically doesn't meet the standard today. I mean, that's very costly. If Craig is going to resurface a street that we fixed a ramp years ago, we've got to rip it out and build it to today's standard. That's very costly. So that's one example of a regulation. And then just fiscally constrained, we have to maintain positive cash balance. So this next slide is just the reality of where we are. The reality is that with the funds we have available for street resurfacing or reconstruction, our recurrence interval in Urbana is 70 years. So if you live on a street in Urbana, which I assume you all do, that street in front of your house, for us to do any significant work to it will be a 70 years, like where Councilmember Smythe lives, 70 years is probably the next time we'll do something significant on that street. And that's based on very simple math. 140 centerline miles of streets.
And riding your bicycle on that street.
And you know, we figure about $1 million a mile. And you know, we're receiving about $2 million in revenues every year. So it's very simple math. It's $70 million. Now, Craig talked about we're doing pavement preservation. So we're trying the best we can to use low dollars to fix our streets, whether it's patching, crack sealing, surface sealing, those sorts of things. But at the end of the day, this is not a sustainable plan for our transportation network. And I'd be remiss if I didn't tell you that it's a 70-year cycle that we live on. So if your constituents call, and we get these calls all the time, you know, the street in front of my house is not in best of shape, et cetera, yeah, we will confirm it, but what we can do to fix it, at least in a significant way, has to wait. And which leads into, if you have any questions, but
we'll just tell them that the Cubs are likely to win the World Series before we get to paving the roads.
Could be. But Craig does want to give you the good news about what streets we are planning to do in the next 5 years.
Yeah, so let's let's talk about what we can do, what is in the program or in the future. Basically, in fiscal year 2015-16, Bill already mentioned the MCOR project, Project 1, which isn't shown here, but that will be a major construction project occurring in 2016. We also have the resurfacing of Lincoln from south of Killarney up to the north end of Saline Court, where it currently dead ends now, and that's in preparation for the opening of, well, actually it'll be occurring at the same time or slightly after the opening of the North Lincoln extension up to Olympian Drive. We're anticipating a fair amount of traffic there. We need to get that road up to speed. We're also looking at Kinch Street, doing some intersection lighting with some community development block grant funds. That is in a lot in the response to feedback that I think you all and city staff received about public safety concerns within the Kinch Street area. In 2016-17, we're basically looking at resurfacing the intersection of Springfield and Lincoln, a little bit west and east of Springfield, from Gregory over to Kohler, and then from Lincoln, from just south of basically Springfield at Western, all the way up to University Avenue there. In 2017-18, that's where the project number 5 comes into play for the MCOR project from Busey to Race. There we're using a combination of state motor fuel tax funds and stormwater utility tax funds to do some of the drainage improvements. We're also going to jump over to Mumford, over by Yankee Ridge Elementary School. There's a section there that's in pretty rough shape that we want to get west of Zupke over to Anderson. We also want to jump to resurfacing Vine near the viaduct. It's showing a lot of deterioration. It's a main entry into downtown, so we want to be able to address that street. In 2018-19, we have the resurfacing of Vine down near the middle school to north to California. And then the resurfacing of Fairlawn from Vine to Anderson. We had a fair amount of bus traffic through there on Fairlawn. Our operations crews are struggling to keep that road intact, and we need to address that one. And then Brad has the stormwater master plan scheduled for 2018-19. Then lastly, in 2019-20, we're looking at reconstruction of Springfield, Kohler to McCullough. You might recall that last year we basically did half of a lane of mill and fill there near the Felix Rec Center there, and that was basically just to band-aid it to gather some time there. We're looking at tentatively the reconstruction of Goodwin south of Clark to University. That's pending a pavement analysis. There's a possibility that that could be mill and filled with patching. And then we've added in the reconstruction of Division from the basically north of Crystal View townhomes up to Kerr. That's a section that is needed. It's not in good shape. We've seen school children walking through there. The drainage is poor. It is something that we think we can use the CDGB funds for in the future. And I'll turn it over to Bill here for the unfunded projects. We're just about home.
So this is just kind of a sampling of some of the more significant projects that are unfunded and may need to be addressed in the years ahead. And Washington Street, this is the stretch between Pfeffer and Dodson. Smith Road is another intersecting street nearby. What may trigger this would be if Menards decides to pull the trigger and build their projects. This would be a street that would be heavily impacted with that decision. East Florida Avenue extension, again, this would be Menard related, but this would extend all the way to High Cross Road, where it currently ends in the Savannah Green subdivision. The East Urbana Interceptor Pump Station project, this was a project that actually has been designed and it's been on the shelf since the Great Recession of 07-08. But this would provide the pumping capacity to provide sanitary sewers ultimately to the area from High Cross Road east past Cottonwood, from Interstate 74 south to Curtis Road, and from Cottonwood east to Cottonwood all the way south of Windsor over to Race Street. So it's a big kind of a backwards L. And this would be pumping that sewage collected in lieu of a wastewater treatment plant to our northeast plants in Urbana here. And that's just the pumping station. Force main is an $8 million project, and Brad alluded to saving money for a project such as this with the use of sewer benefit tax money. We had done a street lighting master plan back in the mid-90s. We've done a lot of the street lighting replacement projects. One of the, actually two parts of that master plan that have not been completed. One is residential intersection lighting. We estimate that to be around $4 million to do all the unlit intersections in the community for safety reasons. Airport Road extension. This is to connect Lincoln Avenue and Willow Road, which is the project we talked about earlier. This would be from kind of the Frasca Field area west to the where the concrete ready mix and asphalt plants are on Lincoln and Summer Drive. Olympian Drive, if we were to extend from Lincoln to 45, admittedly this would probably be phased, maybe perhaps Lincoln to Willow, Willow to 45, but that's about a $12 million effort. Boundary area storm sewers, this will be updated with a stormwater master plan, but we know that there are needs as the city, and especially in the peripheral area, there will be need for some storm sewers and perhaps detention basins. The Lerman neighborhood street lighting area, we're hearing more and more. About a month ago, a lady talked to you about her concerns living in that neighborhood. Again, this is north of Florida, south of Washington, east and west of Kent Street. And then Florida Avenue from Busey to Vine. This is a street that needs a lot of work, and we don't have a cost estimate. And there might be some funding opportunities, state or federal, in the future, but this is something we need to address also, but we do not have monies identified to address Florida Avenue. So these are samples of unfunded projects, and we'll stop and try to answer any questions you may have. Mayor.
Could you explain what part of the sanitary system we do and what part the sanitary district does?
Certainly. Generally, the sanitary district is responsible for the larger diameter sanitary sewers, which are typically greater than 10-inch diameter, and they literally collect the sewage from our collector sewers. How novel a name is that? But they then route that sewage to the northeast treatment plant. So Savoy, City of Champaign, City of Urbana have interceptor sewers. We have maps that clearly identify, and we've all agreed to whose sewers are whose, so we have those maps. And for example, the Philo Road, Windsor Road intersection, that was a clearly identified interceptor sewer. But typically, it's a definition of a larger diameter sewer that goes beyond the collection, but it's more in the routing to the wastewater treatment plant.
Okay, we'll go down the line here. Dennis, then Aaron, then Eric.
I've noticed that in the capital improvement plan, each year there's about $50,000 allocated for parking lot repavement or upkeep. Can you say, the city does have, I guess, finite number of parking lots. So can you explain why there's a continual need for repaving parking lots? Since these are not streets, they're not getting the same kind of use as streets, and we have a lot of need for street repair. So if it's a line item budget, do you expect to be doing this resurfacing, and how many parking lots or what kind of a surface can you actually affect for $50,000 in the budget?
Good question. Well, that $50,000 in some respects does a couple of things. One is it may be there for just basic maintenance of a parking lot, which may be a seal coat. It could be just even the striping. But $50,000 also can be a placeholder that accumulates over multiple years, and we do a major reconstruction or milling and resurfacing. And the last major big parking lot project we did was by the Civic Center, east of the Civic Center, and that was a significant amount of work done there. That parking lot probably was touched 30 or more years ago, and it was in very much disrepair. So we try to analyze the parking lots and do one or so or two at a time. Parking lot 12, which is over by Canaan Baptist Church, Central and Main Street, was a fairly recent parking lot that we did. At the southeast corner of Broadway and Illinois Street, we call that Lot 24 or Lot 24 Extension. That was a parking lot that we built. We tore down a couple homes, built a parking lot there. So those are examples of where that money would be used for. But you're right, $50,000 may not be enough to do one parking lot, so we may have to build that up over a period of years. Sure.
The other thing to note is the $50,000 is from motor vehicle parking system funds, which basically parking meters generate. So the $50,000 was primarily in there for preservation of the investment that we already have in the lots to try to prolong the life of those lots. And as Bill said too, we could pool the money, but right now the 50 that we set aside was primarily for preservation or restriping of the lots.
And would parking lots not be an item that could be improved upon in a TIF district? Like we have parking lot construction concerning the Boneyard Creek and even Canaan Baptist Church. I don't know if that's in the TIF district. It's certainly on the edge of something. Maybe it's not.
Well, I may have to defer to Libby on this question, but we did do parking lot work with our Boneyard project.
I thought you did, yes.
We did enhance parking lot 25 is what we call that, north of the Boneyard. And in fact, we put in pervious pavement there to be a kind of a water absorbing component to that parking lot. So I think for basic maintenance of what this is, I'm not so sure we would use TIF monies for that, but I would have to defer as to whether that would be TIF eligible.
And as far as the Learman neighborhood street lighting, that may or may not happen. What is the city talking to Herman Kittle, the developer of the new Aspen Court townhome site, about responsibility of putting lighting in that section? Is that something that Herman and Kittle and the developmental plan that we're going to see might improve street lighting, or is this not affected by any kind of community project development?
Again,
because
I
it's a
probably have to
private
defer
lot.
to Libby. Typically, though, public money would not be lighting private property, but I'll defer to Libby.
And then what's the chance of having the parking lots vacated to the city and becoming streets? Has that conversation ever occurred?
Yeah, we're starting our discussions with the developer. We haven't gotten too detailed about that, but we'll be talking further with them about circulation, improvements to the parking lots, and those matters. And like with any redevelopment project, we'll figure out what's public and what's private for that development, and it'll come forward in the form of development agreements, budget amendments, things of that nature. I think on the parking lot question, the MVPS funds are really dedicated towards parking lot maintenance and improvements within the TIF districts. So the TIF districts we really want to use for facilitating development and building the tax base, as well as some of the major infrastructure projects that we've done in the downtown.
And then one more thing. I'm looking forward to seeing the development of the Green Street. This is the Tiger Grant area, Green Street by the Union, and you know, to Lincoln. And I really appreciate the fact that the plan includes what sounds like a boulevard with trees in the middle. And I wished that we could have had a similar plan for South 150. That would have been a beautiful amenity along the development of that wide corridor of streets there from the, what you're saying, the Menards section to north to Main Street.
Actually, we do have medians. in
You
that
have
stretch.
medians, but they're not planted, are they? Or will they be?
Well, not with this project, but
Not with this
future
project.
could be planted.
Okay, and then what is the, what's, since the engineering plans for the extension of Lincoln Avenue North, where it will ultimately connect with Olympian Drive from the railroad track bridge to the terminus of, the north terminus of Lincoln, what's the opportunity, since only 30% of the engineering is done, for going back to IDOT and talking about a roundabout there? Is there any chance now that they've adopted building construction plans for roundabouts that we can talk to them about reconfiguring that?
Well, I
Or is
didn't
that
talk
just
about
dreaming?
a critical partner in that project to the tune of $450,000 is Champaign County.
And they're
So I think you'd have to speak with those folks first, and then we could have that conversation.
Okay.
And then you, Eric. Aaron?
Yeah, quite detailed. It's given me a very clear understanding of all the work that you guys do, and I appreciate it. I wanted to know where in this presentation, for instance, and all the information that we received, would someone like the Underwoods, who are still concerned about a sewer concern, where in this that you have presented to us would be a line item or a place in there where we would actually deal with something like that?
Yeah, probably the best map or graphic for it would be Figure B,
Page
29. And what that particular graphic shows are all the sewer projects completed since 1981, which is the period that we began tracking sewer projects before. So you can see up in the Dr. Ellis subdivision area, and the green lines are...
I'm still trying to find the page.
Oh, I'm
You said
sorry.
29?
29, it's in the back. It's one of the big 11 by 17 maps.
Oh, okay. I'm almost there. Okay. I'm with you now. Cool.
Okay. And then if you look in the Dr. Ellis subdivision area, which would be kind of south of Bradley, west of Goodwin, you can see all the green lines there on like Tremont, Eureka, Beardsley, Ellis, even going down to Eade Street. Those all indicate areas that we've done that cured in place sewer lining of the public sewers.
All the green.
Yep, all the green. The red is some storm sewer work that we've done in that area, and actually because that area was where we recently did storm sewer cleaning and televising, there'll probably be some additional upcoming storm sewer repairs, you know, problems that we've identified as part of that cleaning and televising effort. But you can see, you know, most of the sanitary sewer has been rehabbed up in that area. It's had that cured in place lining installed.
So that was one of my questions. The other one, I know that we're not able to, I guess, make money off the work that you do in Public Works to generate revenue, so to speak, other than, I know we have the motor fuel tax and things like that. Is there something that you are suggesting that you think would increase some opportunities for revenue to do some of the work and some of the projects?
No, I don't have any recommendations tonight, and I wouldn't make any such recommendations, I mean, without staff discussion, so.
Okay. My last point would be in relationship to conversations that we've had off and on. But what I'm looking at is so what you gave us early on for projects that were completed was 2014, 2015. So I know all of it didn't come through the city of Urbana, of course, but I'm looking at about $38 million, if not more, worth of project work that was done. And consistent with our conversations up to this point, you don't have numbers that would show how much of that would have been awarded to African-American contractors or anything like that?
Do I have such numbers? I do not.
So not just tonight, you said we don't have them, period.
I don't have those readily available.
Okay.
No.
And so I'm just making the point further. We're talking about millions and millions of dollars. We're always talking about public safety and all these different components. So just sort of reiterating and restating as affirmatively as I possibly can the importance for us to incorporate the contractors, the workforce, so that we can help address some of these other concerns and we can all benefit from these large pools of money, especially when they come in, because they don't all come in at the same time like you described. Sometimes there's a big fluctuation, and then there's a drop-off and stuff like that. So I just wanted to point that out. I'm sure there'll be some follow-ups about this Seward and stuff. I think Dr. Underwood and Bishop are going to keep you cornered to about 11:30, showing them the map so they can answer their questions.
Sure.
Sure. All right.
That's fine.
Eric?
I've been trying to find out, I'm curious about how typical or atypical that 70-year cycle time is. The only comparable one I could quickly find on the internet was Columbia, Missouri, which has a 46-year cycle time. But I wonder, what are the ranges?
Other communities?
Yeah, other communities.
Better and worse. It's all over the place. The envy in my position is Austin, Texas, on about a 10-year cycle. And they can go as high as 100 years, unfortunately. So, yeah. I think our neighbors next door, I'd have to look it up, but it's not much less than us.
Others? Okay, I've got a couple quick ones then. I was asked today by somebody working on something in my house why we don't use more hot asphalt patching, or why we don't take out small sections and mill them and then replace the pavement with hot asphalt.
That's a really good question, because we're going to actually do a small project this year. We're first going out with a concrete patching project to get Bradley ready so that we can put bike lanes on there. And then we will do an assessment here shortly to go out to bid and to hop around. The only issue, the concern we have is, like what Bill mentioned, is the demand far exceeds the supply. And we're expecting high prices with that kind of work, but even higher prices because we only have 2 contractors that do that work, and they're all booked up. So, but our intent is to jump around and patch where we can, but that is something that we do have to hire out.
So there's job opportunities there. Okay, MCOR.
I'll add one more thing to that, and this is talking a little bit about next week's presentation with Public Works operation budget, but it ties in perfectly. And our operations people have been looking at for lack of a better word, a box that warms your asphalt for the winter time frame rather than using cold mix, cold patch we currently do. This lasts better, has a better life to it. We know that Champaign has a similar setup, and we've looked at it, and we've borrowed the equipment this past winter. And in our vehicle equipment replacement fund, we're looking to upgrade some equipment to do this so that we have a longer lasting
The flip
patch.
side of this guy's statement was that the cold patch is worthless.
Yeah, in many cases it doesn't hold up real well in certain circumstances. So,
MCOR, how will the MCOR stuff affect the work that's already been done at Goodwin and Green, or does it work around it?
good question. I don't know all the impacts yet as to the signal locations and such. The fact that the road is narrowing is good. but the signal head spacing may be off now. Maybe it can be shifted. We're still in the preliminary design phase. That will come out probably in the next 6 months as to the impacts there, but we'll keep you posted.
Yeah, I would hate to have wasted money on that. East Washington, there was some subsurface, there were cores taken on East Washington, as I understand it, and I rode over them literally a couple days ago, and the patching was terrible. They're big humps where they patch the stuff. So why was that cored when it was only recently milled and paved?
Well, the coring is in response to basically a forensic analysis that we ordered to have performed because we're getting premature cracking. So we're trying to determine why. I mean, it was just recently resurfaced, and now we're showing cracks that we don't normally see. And we're seeing the same thing on a few of our other streets. So we're trying to understand and determine why. Now, as far as the rideability of those bumps, I saw those myself, and I'll be talking with the company to urge them to take care of those bumps.
And my last concern is actually Florida Avenue. I'm concerned that it's going to be, we're going to have a issue with it, much like Windsor, and be pushed to deal with it very quickly. I know it's had some failures, and some sections are in pretty bad shape again. You talked about a federal or state grant. Are we going to really seriously pursue that? Because of all the things that are on your list, to me that strikes me as the one that's going to come out and bite us before anything else.
No, we will definitely keep our eyes open for those opportunities that are there. One thing we've been considering is the eastbound outside lane is in the worst shape of that pavement width, if you will, and perhaps we can get a little bit of life out of shifting parking to the south side of the street and directing the traffic flow on the northbound, north side parking lane. It's just an idea we've had to maybe extend that life a little bit, because as you see, it hasn't been identified in this 5-year plan.
Others? Okay, seeing none, we need a resolution to send, we need a motion to send resolution approving the capital improvement plan to City Council for approval.
Second, or I move.
I'll second.
Moved by Diane, seconded by Aaron, to send resolution 2015-526R to council with a recommendation for approval. Further discussion? All in favor?
Aye.
Opposed? Okay, and then is there anything else from anybody? Aaron?
No, not for these gentlemen. Thank you, fellas. Appreciate it. We do have a member in the audience who did not get a chance to come up and say something about the resolution or the Day of Gratitude. He's been waiting for a couple of hours. I thought we might give him a few minutes.
That's why I said, is there anything else?
Oh,
Did you wish to say something? Please step up.
First of all, I'd like to apologize for being tardy, I suppose, for the meeting. I was at the Champaign Council receiving the proclamation for the Day of Gratitude there. What I'd like to say is that I am grateful that this particular day has been approved and so forth. And I hope that this Thursday, that we all pause and give gratitude for things that we've received, either personally, professionally, or whatever. And I'm quite sure, you can even be grateful for a smile. So it's one of those things that will benefit us all the way around, and with all of the strife and so forth that's going on around the world, this is a time to get a quiet place within yourself, and we'll be much better for it. Thank you.
Thank you.
Diane.
I just had one announcement. I wanted to let people know that the annual meeting of the Southeast Urbana Neighborhood Association is tomorrow night, Wednesday, 7 o'clock at St. Matthew's Lutheran Church on Philo Road. And a number of city officials will be there, plus representatives from ITV3 and the Urbana Library. So you can get information about city services, about library services, plus information about the high-speed internet system that is being installed in Urbana. And while it's a SUNA meeting, everyone is welcome.
Mayor.
Well, we've been waiting for the bill on the 911 funding, and the committee that worked on it had some really good ideas, like making sure that every device has, pays for this, but they kind of fell down when it comes to the funding for local governments. Right now, by legislative action, the city of Chicago gets $3.90 a month for the 911 fee. That was raised from $2.50, and what this commission has recommended is 87 cents for the rest of the state. So it's in a bill now. I got the notice from our lobbyist that it's Senate Bill 96. I looked up Senate Bill 96, and it's a bill about mining feldspar. So I just want you to know that that bill is being amended, and that the process that the Urbana City Council follows, I think, is much more clear and accountable and transparent to the public than the process that's followed in the legislature. But if we lose on this one, we will keep working on it, because it just needs to get done.
Okay, and I'll add one last item here. The first of 5 downtown Urbana movie nights will be this Friday. I think music begins about 7 o'clock, and the movie starts about 8:15 or so when the sun sets. The movie is The Bicycle Thief, old Italian classic. And I will remind everybody that parking in downtown Urbana is free after 6 p.m. on weekdays, and it's free all day Saturday and Sunday. Just a reminder there that parking even by day is pretty cheap. With that, we're adjourned.